just check that everyone can hear me, both online and in the room.
Yes, thank you.
Perfect. The agenda
Yes,
pack
thank
and
you.
papers has already been published via ModGov and is on the council website. When I invite somebody to speak, please can you clearly state for the benefit of anyone who's listening who you are, for the benefit of the record. Do we have any members of the public today? No. Okay. The meeting will be recorded as usual practice. Okay, everyone happy to start? So initially I've got a couple of changes to the committee. So I'd like to welcome Councillor Gwyl Wren along. Welcome, Gwyl. Gwyl's replacing Shane Collins as an independent member of the committee. And we've also got one other change in that Councillor Steve Ashton is no longer a member. That vacancy will be filled in time by the Conservative group. So moving on to apologies for absence, we've got Mike Haswell, who I believe is online. Welcome, Mike. Lindy Van Vuren, our independent member, is unavailable today. Councillor Lee Baker has work commitments, and Councillor Tim Curley is online. Are there any other apologies for absence that members would like to declare? No, perfect. So I'll move on to item 2 on the minutes, which are the item 2, which is the minutes of the 25th of January committee meeting. So firstly, for accuracy, I would like to propose a slight change to the minute on page 14, that the sustainable MTFP remains a significant risk. The effect of the control measures put into place, work and actions completed across the council, the Executive Director of Resources and Corporate Services, Jason Vaughan, and the Deputy Leader of Council, and the lead member for Resource and Performance, Councillor Liz Lashon, advised that is, and this is the amendment, the current financing model for the local government, the council is not fully sustainable. So the current financing model for local government, the council is not financially sustainable. So it's a slight tweak to reflect the fact that Liz felt that the minute didn't fully reflect her position, which is that we hope for the council to be fully sufficient going forward, but it's the funding model that's wrong. Liz, is that a fair summary of your concern? Okay, so Liz has proposed that change to the record. Are members comfortable with that, Simon? Okay, any dissent? No. So if that change could be made. So are there any other matters of accuracy from the minutes? Mandy?
Tried already to thwart me. Not actually, Chair, but there are about 5 actions in there that we're going to have items to coming. Are you going to?
We'll take matters arising in a moment. If I can just do the accuracy first, if that's okay. Yeah. So can we propose the minutes as accurate, Simon? Seconder? Andy? All those in favour? Right, so the minutes are accurate. Mandy, if you'd like to raise any matters arising from the minutes which aren't covered elsewhere on the agenda.
Thank you very much. So the first matter arising was page 8.16. My pages, I've got a feeling I've done all my notes from the online papers, which are looking different to these, so I might have to struggle today. But I'll tell you what it was about. It was, the chair responded that it was for each member of the audit committee to make an assessment on capacity and maturity and clarification and action taken by audit committee in response to the financial emergency, and requested that the transformation programme report be considered at the audit committee meeting on the 28th of March. So that's my first. It's page 18.
Thanks, Mandy. So we actually had a meeting with the chairs of scrutiny and audit. It's going back a few weeks ago now to hear more about the plans for the transformation programme. And well, you were in the room. Can you remind me? Sorry to throw you under the bus there. Can you remind me if what was eventually agreed at the subsequent meeting?
I'm sorry, because it was a matter arising from the last meeting, I wasn't fully paying attention at this point. So if you just bear with me, I'll go back to my notes. And so it's about the transformation, the meeting we had.
Yeah, so we had an initial meeting of the chairs of scrutiny. There was a meeting the following Monday, which I couldn't make, which was with Alan and I believe there was.
Yes, Alan was with
there,
us.
yeah.
I mean, essentially the plan, and I'm sure Councillor Lation will be able to correct me if my memory is failing, is that the transformation will be broadly complete by September, which, and I think the chairs of scrutiny were a little bit concerned about the, shall we say, the dovetailing of the voluntary redundancy scheme that is ongoing with what comes out at the other end. And there were questions about which end of the telescope the transformation was looking at, whether it was all about trying to fit to a budget or actually whether it was all trying to see where we got to and what was left. And I think Alan said, frankly, it's a bit of both, because we're in a difficult situation. Clearly, we have to address the salary burden, and that has to be, that's not a quick process. But equally, we have to come up with a fitter and leaner council that's capable of doing what it needs to do more efficiently, and that has to be up and running and in place for next financial year, so that we can do our financial planning in the second half of the year.
Thanks, Will.
But I don't think we got what you would call any hard and fast decisions at this point, because they're still in the early planning stage, which I think is fair enough. Yeah. So what we did say was that all the scrutiny committees needed more or less to have a standing item on their agenda running up to that point, so that we could monitoring what was happening in our areas of work. Does that help?
Yeah, that's perfect. The item has been deferred on the forward plan from this meeting to the following meeting, so to the 30th of May. So that's when the substantive discussion will take place Monday. So just to confirm you, it's not fallen off the radar. It's just been pushed back slightly.
And I just get concerned when I'll go through the others in a moment, when there's a whole number, we don't want them to fall off the radar. And it's just that tentative difference. This was around clarity and assurance of the governance arrangements of transformation, which isn't quite the same as an audit going to scrutiny. So I look forward to receiving that. The next one was on the following page. It says requested that management responses be improved and strengthened and considered at the audit committee on the 28th of March. Is that covered? Forward plan.
Yeah, so that's been bumped to 30th of May as well. Reason that's been bumped is I was trying to keep the agenda more manageable for today, because we've got the two audits that we're hoping to conclude.
Thank you. Next one was page, I've got it as 13, so it'd be 4 pages on, and it said, how did Somerset Council discover the high levels of unpaid placement invoices, as well as significant overspend in CLA placement costs? And SWAP were going to provide a written answer. I think we had that yesterday, didn't we?
Alistair, if you'd like to come in.
Yeah, thank you, Chair. Alistair, Head of Audit. I do apologise to the committee for getting that response to you late, but you should have received it. And if you do have any further questions, please raise them with me and I'll happily discuss it.
Thank you. It came after I'd done all my paperwork, so I noted that yesterday. And the last one was around aged debt and debt recovery management. It said Nicola Hicks advised of the work taking place to amalgamate the predecessor council systems, and that the reporting in future would be to audit committee. And I think we've heard that it's going to come again, be bumped to next meeting. Am I correct on that as well?
Yes, it will be.
Thank you very much. That's it.
Thanks, Mandy. Okay, any other matters arising from the minutes which aren't covered elsewhere on the agenda? If not, I'll move on. Thank you. So declarations of interest. Any from any members? Will?
I'm in receipt of a Somerset Council pension.
Okay, thank you.
Should be on the normal one.
Public question time. I have no public questions which have been submitted by the deadline. So I'll move on to the substantive matters on the agenda today. So firstly, the external audit findings report and the audit conclusion for Sedgemoor District Council. So I'd like to hand over to Julie Maskey, who'd like to speak to the report.
Chair, thank you very much indeed. Good morning, councillors. So this is the audit finance report that brings together the final conclusions from our work for Sedgemoor District Council. You'll see from the executive summary of the report that at the time that we issued that report, there were a small number of items that were still to be resolved before we could bring the audit work to a conclusion. I'm pleased to say that all of that outstanding work has now been concluded, and we're just doing the sort of final completion procedures, and obviously we'll receive the signed accounts following today's committee. To give the overall conclusion, we are proposing an unqualified audit opinion, which is a clean opinion for Sedgemoor. It will be subject to what we refer to as an emphasis of matter paragraph, which highlights and draws to attention the fact that obviously Sedgemoor Council has demised now into the new Somerset Council. That's consistent with what we've had to do in the previous year. But just to highlight a couple of key findings that have arisen from the work, if I may. One of the main areas of work that was outstanding at the time we issued the report was in relation to some valuation work we were undertaking in relation to a significant council development for Sedgemoor at Northgate Yard. As part of the work we did for the audit, that was categorised in the draft financial statements as an asset under construction, where in fact the completed project had been handed back to the authority in October 2022, and so should have been effectively treated and valued as a completed asset. So once we challenged that with management, they prepared an initial valuation. That was prepared on the basis of it being classified as an investment property. But actually, when we probed further, we try and get into an understanding of the actual use of the asset, because there was regeneration principles around holding that asset. Actually, it should have been categorised as operational land and buildings in accordance with the code. That notwithstanding, actually that change in classification hasn't had a significant impact on the overall valuation, but in moving it from an asset under construction to a completed asset, that has had the impact of reducing the carrying value from 16.4 million down to about 2.6 million. So a substantial change in terms of the valuation. The other area that we highlighted that was work still to complete was around the exit packages disclosures in the accounts. Obviously, as part of the broader reorganisation of the authority, actually some of those packages were confirmed prior to the 31st of March, but yet the disclosures in the accounts didn't reflect anything to that effect. We had to do some further work looking at post-year-end payments in terms of what had actually gone through the payroll system. We'd also picked up a couple of items through review of council minutes to corroborate that. And in total, we found a total of 6 staff members where that did apply for exit packages to the total of about 240,000. So that work has now been concluded. You'll see in the later part of the report some detailed actions in the action plan that have been agreed by officers and responded to. And there are a number of other smaller amendments, none of which are sort of material in nature, but reflecting obviously that the council has had an enormous task having to put together a series of sets of accounts. So actually sort of notwithstanding the items I've just covered, to have that sort of level of adjustments, recognising the challenging circumstances that the authorities had to work under, there's nothing else particularly of concern I would wish to draw to your attention. Chair, I'll probably stop there in terms of findings from the report, but overall, as I said, a clean bill of health as far as the audit opinion is concerned, but happy to open out for specific questions. Thank you.
Okay, so opening the floor to members, firstly from Andy.
Thank you, Chair. Reading the report, that's one of the things I picked up was about the Northgate development yard, which obviously is a fantastic development that Sedgemoor Council undertook. Obviously, it's a cinema, restaurants and what have you. So obviously it costs 16.4 million to build. From the valuation, how can it then all of a sudden, when you revalue it, go down to the valuation down to 2.6 million? I just don't quite understand how you can lose, 13 odd million pounds in valuation from obviously what it costs to what it is now. I don't know if you could just give us a bit of highlight on that if you can. Thank you.
Chair. So I'm Ben Bryant, the Head of Corporate Finance. So I think that reflects that it was part of a regeneration policy. So a lot of money spent on regenerating that area. A lot of that value that we are carrying through that asset under construction is somewhat evidence to a market agreement that had happened before in terms of the site being development land. And then I think it was a reasonable value to hold during asset under construction. But then when it comes into use, it's what's the value of it as the asset that it is, rather than the potential for development land as it was. And that's where we see that reflection in the valuation difference.
Thank you. So what you're saying is that the rental income from the cinemas, the restaurants, is how you value the asset now. So it's the income generated times a multiple gets you your asset value. Is that correct?
Yeah, that's correct. Yeah.
Gwyl?
Thank you very much. I'm intrigued by reference on page 5, the last paragraph talks about Somerset West and Taunton invested 37 million in commercial property portfolio. I'm assuming the reference to Somerset West and Taunton is a typo. Page 5 on the audit report, the last paragraph. Page 39 on the full report. It says Somerset West and Taunton invested 37 million in commercial property.
Page. Yeah.
Okay, thank you.
Okay, so if that could be amended on the final report, please. Any other questions, Mandy?
Thank you. You'd expect me to raise it, but obviously we've had a supplemental agenda that came through really late. I'll say it again. I've said it numerous times. It's a real challenge when you get hundreds of pages come through 24, 48 hours before a meeting. To try and get that done sort of in good detail becomes really challenging. So I absolutely appreciate you want these signed off. I absolutely appreciate the staff want them done and dusted, as I'm sure do the auditors, because they will probably have other jobs to move on to. But I am concerned that they came through very late, and I, for one, whilst I've been through them, did not give them the level of detail that I would like to had they come through earlier. So I understand the reasons, but please don't keep doing it because it puts huge pressure on.
Mandy, so it won't happen again. The reason we've, as you know, the reason we've had to meet this deadline is so that the audits don't fall back behind the NHS audits that the auditors are about to start working on. We wanted to get these out of the way. We'll make sure that this doesn't happen. Obviously, the workload of audit committee in future should be substantially less than it's been this year. This has been an exceptional period. I know that we've worked you all very hard, and it's less than ideal, but I will make sure that you don't get papers late again. I was reluctant, but I acquiesced because I understood the need to get this signed off as quickly as possible. So apologies from me.
Thank you, as do I, and I think I hear a lot. It will never happen again currently across all sorts of committees, and it keeps happening. So it's fair to mention it. Just for me, there's the work is substantially complete. I was quite surprised in the report to read that the audit report was completed remotely during October 2023. And I keep hearing that we have increased costs for audit sort of due to COVID. And I'm just trying to understand if working remotely, does that increase the cost and pressure or decrease it?
Over to Barry.
Yeah, can you hear me? Yes, it is more expensive to audit remotely. We are encouraging audit teams and finance team members to attend on site wherever possible. And that is certainly going to be my intention moving forward for the 23-24 audits. But Andy, you're absolutely right. We'll come on and talk about the other audits in a moment and some of the challenges of working collaboratively together. But you will appreciate that when we did work together in the offices on delivering the Somerset County Council audit, that worked really effectively, and that got the audit delivered by the end of January.
So just to follow up on that and for clarity, when working remotely, is that due to Somerset Council or is it due to you as auditors? You know, who makes that decision on the remote? Because I think being in and present is easier and preferable in terms of audit.
Game of chess, isn't it? So we encouraged our teams to come on site where it's reasonably possible to do so. But sometimes it is down to the limitations of the availability of council staff. So again, it's a sort of a blend. There are some efficiencies of working remotely, but there are efficiencies. So that's why I want us to move much more to a blended approach going forwards.
Jason, if you'd like to, the management response to that.
Yeah, we're very happy to have the auditors in the building and have space for them. Clearly, we are in this funny period of going from 5 former councils into one. I think for the 23-24 audit, that face-to-face being in the office will be a better approach. I think, and make the audit a bit more smoother as a result of it. So we're happy to support that. And I'm pleased you asked the question about fees, Mandy. It wouldn't be audit committee without you challenging the auditor about their fees. But yeah, in context, I think we've seen the sort of national thing. The audit process is a bit broken, frankly. We have driven the fees down to a very low level over the last few years, and I think we're seeing that reset going forward as to appropriate fees for the appropriate level of work, which I think hopefully will be on an even keel in future.
Thank you, Chair. I do think audit is one of those things that is preferable on occasion, face to face and in the office rather than remotely. So I very much welcome that. My next question's around, it says in the paperwork that it's substantially complete and there is quite a list that isn't complete still in the papers. And it feels like quite a long list. It's not one item.
I think Julie said that the work was now substantially complete. Is that correct?
I'm looking at Sedgemoor.
So at the start of my presentation, I highlighted that the items outstanding are now fully completed.
Everyone?
Yes. Other than the letter of representation, which will be signed at this meeting.
Fabulous. Fine, I'll say them all then if they're done. Thank you.
Sorry, Ben, do you want to come in?
Yeah, so I did write, firstly, apologies for the lateness in the publication, but it was to strive towards that, Mandy, and I appreciate you said it in the January committee and you've said it again now. Once we're through these, I think that national context, this is then set of accounts number 6 out of 7. We've still got the SSDC South Somerset one to go through, and we just wanted to get these over the line, and some of that was we wanted to be able to sign today and not leave it to the next committee, appreciating that puts pressure on you. So I recognise that, sorry. But it's to get us to this point that we can then sign this off and move forward, which we won't then act like this during the 23-24.
Thank you. Just finally, I absolutely appreciate we've got to get them over the line, but it needs to be done in the right way, following all the rules and properly. So I welcome that we're now sort of all those issues sorted out. Thank you, Chair.
Yeah, of course, Ben.
So I'm quite pleased to be able to get this set of accounts over. It's another one done as well. And just, they're not in the meeting here, but to record some thanks both to our staff, Alison Monteith, who will be leaving us in April, and also Sarah Williams, which was a temp brought in. Huge effort from both of them to get this over the line as well. And when we're losing legacy staff and legacy knowledge, to be able to put a set of accounts together and deliver that is exceptional. And also thank you to the auditors, particularly because we were stumbling through January a little bit and it all got brought back on track to be able to deliver today. So thank you for that as well. I wanted to pick up on some of the findings, for me particularly that asset classification and valuation one. You'll see in a moment as well, there's a continuation of that theme around asset classification valuation, and actually that is a huge risk for the audit of the 23-24 accounts for the new council. I mean, that's qualification. If we get our assets wrong, that's qualification no matter if the rest is right. So we acknowledge that, we'll learn from that in terms of those audits. And we already knew anyway, it's the challenge of bringing 5 together. One, when you look at some other councils, that's where their feelings being about record retention and knowing what they have. So we've started working with our property colleagues already. They've got a new Civica asset database, and we're starting to reconcile that database with the finance registers. I've instructed my team to definitely look through the asset under constructions and make sure that things are under construction and that they're not gone into use. some of those quirks again around policy, and initially thinking that something was an investment property because we're holding it for yield, but it was part of a policy that was agreed prior, and we need to be sure on those things as well. So just some reassurance to the committee, we absolutely recognise those things, common theme, and that's something that we'll be looking to address as part of this 23-24 close down.
Thanks, Ben. I've got Councillor Coles, but I would like to formally offer my thanks on behalf of the committee for the work that you and your team have put in to get so many statements of accounts across the line. Simon.
Thank you, Chair. It's a comment more than anything else. I appreciate that it's been a very highly pressured time to get stuff done. Because as I understand it, we've got to get some of these over the line by the 31st of this month. And we've made great efforts to get there. And I thank the staff and the auditors for doing that and getting us to this point. What are the ramifications if we don't manage to get them signed off?
So my understanding, and please feel free to jump in if I've got this wrong, is that essentially the auditors will need to move on to their other audits, particularly the NHS audit cycle, which would mean that this audit wouldn't be closed off until probably October, November, January, February. No.
No. So just to clarify, as Jason's already intimated, the state of local audit is in crisis, and the government has stepped in to take formal action. So that action is that any audits that have not been completed by the 30th of September will have a disclaimed audit opinion on them. So that basically means there is no assurance over those audits. That will have significant ramifications in terms of the level of work that is required to get those audits up to date. Now, we've worked incredibly hard with your finance teams to ensure that we are not in that position as far as Somerset and its predecessor authorities are concerned, because you can imagine, actually, we're here in a really great place, and we've got, I don't know where we are with Mendip, by the way, but with all those that are in our control, we don't want any one of those elements falling down, because if one of those elements falls down, then the whole lot falls down for Somerset. And that is not a position we want to be in. So that's why we've put so much resource in to try and make sure that all those audits are completed. So the deadline is the end of September. And if we're not going to get there, then it's a very different conversation.
Would still be good to get as much done by the end of this month as we possibly can. I would like to thank the staff and the auditors for trying to get us to where we are now, and hope that we can get everything done before September to avoid those pitfalls. I'm looking forward to approving the accounts.
Thank you. Habib.
Thank you, Mr. Chairman. A few questions, actually. What are those samples? I mean, my question is to Julie, perhaps. What are those audit samples that we are waiting for? I think you referred to them on page 33. And in terms of properties and HR, do you find that there's still a challenge with audits? And if so, what are we doing to sort of overcome that? Then I have a question for Ben, perhaps, if I may. How often do our properties get revalued? And do we actually go to the private sector to get that? And what happens if we actually see a downtrend of those properties? Is there an action plan there, or is there not, or do we wait for the market to pick up? So I don't know whether you'll be able to answer that, but I'll be grateful for some sort of guidance. So those three questions to start with. Thank you.
So to Julie, regarding the sampling, is that we've now closed off all of the outstanding actions, so the samples have now been complete. So there isn't any outstanding sampling that's required.
This report was actually compiled before. Okay.
Yes, that's right. So this report was obviously, we tried to make sure that before the reports go out the door for public consumption, that they're as up to date as they can be at the point they they go out the door. So that reflected where it was about a week ago. But literally over the last week, the team have been working sort of flat out to get all those outstanding areas done. So as sitting here today, all of that outstanding sampling and testing has now been completed.
So I think Habib had some other questions, didn't you? So Ben, regarding the revaluation of property, I think that's an annual process, isn't it? And do you want to explain the process to
Code
Habib?
required it to be 5 years, and it depends on which legacy authority it is and what asset classification. So moving forward for the 23-24 accounts and onwards, for the new council, we've been working with our property colleagues on doing a 3-year annual cycle. But within there, what an indicative market value might be for certain beacon type properties, so that we can spot if an asset classification or say a region looks like that there's significant changes, and we can do further evaluations on that. Things like investment properties, we value on an annual basis because of the classification type it is. So that's how regularly we do it. In terms of if we see a downward trend in the valuations, I haven't got an answer as to what our action plan is to make a difference to that, because a lot of that would be market based. We don't hold assets for profit. So other than it affecting our balance sheet, and then the commercial investment side, we've got an asset strategy for how we're going to manage those strategies, those assets moving forward in terms of their disposals. Nicola, I don't think, is there anything more in terms of?
No, just really, I think we've inherited a position where the legacy councils was a mixture of in-house valuations and external valuations. And so we are looking for the in-house team did a very good job and had praise from our external auditors in terms of the county's valuations for 22-23, and therefore we have confidence that they will be all over our asset valuations internally for 23-24. But I think, as Ben said, is in terms of the valuations of those, we haven't received that report yet for the current financial year. They're working on that as we speak, so we don't know what we're seeing in terms of the trend of those assets in valuations at the moment. Although we do know from other reports that have come before committees in terms of our investment portfolio that we inherited from the legacy councils, that we have seen a downward trend on them, but that's linked to a disposals programme that's in place of a phased disposal of those.
Okay. Mandy and then Norman.
Yeah, just trying to help things moving forward, really. I mean, I think you could have quite easily put in the covering paper that there will be a verbal update at the meeting. I'm just thinking about the record as we move forwards. I think really helpful if you're doing a cover report to pop that in there, because I think that would have linked through with where we're at today. And also for me, just a request, I think if there are a few sort of major issues there that have been brought up around properties and valuation. Again, for me, it would have been nice to have highlighted those in the covering report, because again, I've been through this before, the public will not read through a great big auditor's report. So I think if there are some points to highlight, just moving forward, it'd be quite nice to highlight them perhaps in a covering report, just a suggestion.
Apologies for that, Mandy. We will take those comments on board going forward.
Right, so Norman.
Oh, right. Recognise that it's uptake of pensions or asset valuations, basically, as to how well the fund has done. 15 million, how much of it was pension take up and how much of it was asset drop in value?
Sorry, can you just repeat the page number, please?
Sorry, 59 and 60 on supplement 1.
Sorry, Norman, could you repeat the question?
Yeah, My apology, I didn't have the switch down properly. It's the pension liability and reserves figure at the end has changed from 71 to 22 million on page 60. The report, it's page 57 in actual fact in the report, but it's on our line page number, it's 59.
Yeah, it's so in the paper supplement pack I've got, it's our page 60, the accounts page 58.
Yeah. Sorry, there's two numbers on the page. I've just seen that. My apologies. That doesn't help, does it? I just thought that, surely the pension fund values hadn't dropped that much. So I was just thinking that's an awful lot of pension take up.
Shall I?
Barry.
I'll go first. I emphasise it is the council's council. This is due to the revaluation, the triennial revaluation of liabilities. So what you'll see is that actually in the period of high inflation, I'm now really conscious because Julie's the pensions expert. And I now wish I hadn't got in so quick.
Julie, there can be a quiz after this answer if you like.
Yeah, so Julie will now correct everything I say. So because of the triennial revaluation, we've been in a period of high inflation, high cost of living. That has an impact on the discount rates, which actually brings down the liabilities. So you have got, for many, many, many years, we've been used to local government pension schemes having rather large deficits. What we've seen is those deficits have come down considerably, and in some cases have actually moved into a surplus position. Which brings further complications. But that's the reason, because of the higher discount rates, which means that the liabilities come down. Did I get that right, Julie?
You did get that right.
Gold star.
Sorry, I hadn't thought of triennial review.
Thanks, Julie.
The other area of the accounts, it's actually helpful to see what Barry was just describing. It's page 87 of the account, which I think is 89 of the supplementary pack, which shows the key assumptions that feed the actuarial valuation. And what you'll see there is the discount rate specifically has increased from 2.6% to 4.8%. So when you have an increase in discount rate, you have a reduction in your liability. So it's principally driven by changes in actuarial assumptions.
Habib.
Just another question, if I may. If I refer to page 63, it's quite concerning because it's all red. In your view, how do we actually go about? Obviously, there's a significant weakness identified in financial stability, governance, and improving economy efficiency. So, how do we overcome that? Is there any plan in the next 6 months, a year, to address some of those issues?
I'll start if I may, but the officers, Barry, may want to come in. So page 63 covers the specific work around our value for money assessment. And there was a joint review conducted across all of the legacy councils, including the Somerset Council. That detailed auditor's annual report came to the last meeting. So what you've got here is just a summary of that in the context of Sedgemoor. But I think the auditor's annual report and the recommendations how management had taken those actions forward was covered in detail at the last meeting. But I wasn't present at the last meeting, so I don't know whether officers may want to come in on that one specifically.
Yeah, just in terms of that come to the last audit committee, and it's down to come to the next one with the updated action plan in terms of the planning officer's report, if that's what you're referring to in terms of that value for money work.
Okay. So if I could focus us back on the statement of accounts, are there any specific questions on the statement of accounts that members would like to raise other than what's already been raised? No? In which case, could I move to approve the statement of accounts? Proposed Andy, seconded Simon. All those in favour? Any abstentions? And any against? Yeah, that's fine, Andy. I understand the issue, and that was largely because we weren't members of the predecessor authorities. It's difficult for us to have absolute certainty that said, we've got to try and move forward. So pragmatically, I think understand where you are. Okay, so that's the statement of accounts approved. So now we need to approve the annual governance statement, which has been included with the statement of accounts. It's been slightly updated. It's a bit of a nonsense that we're having to approve something for an authority which no longer exists, but there we go. So can I have that formally proposed, Andy? Seconded, Simon? All those in favour? Can we note the audit findings report from the external auditors? Yeah, everyone happy with that? Yeah, that doesn't need a formal vote on that one, I don't think. No. And are we happy for me to sign the letter of rep from the auditors? Yep. General assent? That's fine. Julie, I'd like to thank you for the work you put in on the Sedgemoor accounts. I think you've been the auditor there for a while. So thank you for all the work you've put in, and hopefully you can go and do other things now. So thank you. Right, talking of more exciting, we're going to move on to South Somerset. Who'd like to go first?
Thank you, Chair. I'll go first, and the whole committee, but really reflecting on Councillor Chilcott's comments. I do apologise again for the lateness of the report. The reason that it is late is we did change, and we had a number of discussions with officers to try and put the report in the most easily digestible format that we could, and bring it as up to date as we possibly could. That inevitably the trade-off was around the timeliness of that. And I can confirm with Jason that going forwards we will be issuing reports in line with the normal committee timescales. This audit isn't where we want it to be, so I wanted to be in the same position as Julie, coming here with a final audit findings report, which summarises all of the findings that we've come up with. There have been a number of frustrations to that, both in terms of the quality of the supporting of the financial statements, the underlying records to get us there, and then when we have got queries, the timeliness in actually responding to some of those inquiries. What I would say is that when we have got the information in a format whereby we're able to select our samples, officers at the council have responded very promptly to that. So again, we pass on our thanks to officers for responding to those sample requests once we've identified them. Now, what we've done is, and again, this was an area of debate with officers, is on our page 8, where we set out the financial statements. We've put in a traffic light system, as you will, to highlight what the position of each of the various balances are. We did emphasise that this would look like there was ongoing roadworks and the traffic lights got stuck on red, but things have moved forward over the last few days. So this position does reflect that progress has been made on a number of items. But you will see that there are still a large number of items where we haven't got sufficient evidence in order to commence our work, and that information we are expecting to come through in April. So what does that mean for this committee? And I will hand over to Beth in a moment to go through a little bit more of the detail. So this report is not in a format where normally we would be seeking your approval of the accounts. What we are proposing is that the council and this committee approves the accounts subject to any material issues being identified by ourselves. If those matters are identified, then we will obviously not sign the opinion, and that would then come back to a future audit committee. This report will be updated to reflect the final position at the end of the day. So if you do approve to give delegated authority to the chair so that we can complete the audit in April, then that's what we would do. We would complete the audit, sign the opinion, and then come back with the report. And that can either come back as a report for information or for discussion. So you've got a full analysis. So we don't want to undermine your opportunity to comment. If, however, we're unable to do that and there are material changes, then we'll just come back and present as is. So that's where we've tried to get to come up with a pragmatic solution to conclude the audit as soon as we can. And the reason for doing that, as Ben and Jason have set out, is because we don't want to stop the work on preparing the 23-24 audits and the accounts. And that's a real concern for us and officers alike, that actually any further delays in completing this audit will put at significant jeopardy the timely completion of the 23-24 accounts, which just is not appropriate or acceptable for the new council. I'll hand over to Beth to go through and highlight just a couple of the areas.
Thank you, Barry, through you, Chair. A few areas for members to be aware of. As Barry has mentioned, he's covered the majority of the headlines. We are not where we had hoped to be. On pages 8 through to 11, we set out each of the areas which was not complete at the point that we submitted this report. The traffic light system is intended to indicate where we expected to be by the end of today, which is our last working day of the month. I'm pleased to report that the majority of the green areas are still on track, so they should be completed by the end of today. And a number of those amber rated areas are also on track to be completed by the end of today as well. So those were the areas which were highlighted that we may be able to complete the work by the end of this week, but we saw some risk to the ability to deliver. Of the red areas, none of those we expect to complete by the end of today, but that was never our plan after we've had to reorganise the structure of our work and reallocate the resources. So that work is now planned to be completed next month. It's also worth highlighting to members on page 7, the materiality that we set for the financial statements audit has not changed since our planning materiality, so that remains the same. The significant risks that we identified in our audit plan, which also came to this committee, have not changed, and there is some detailed reporting set out against each of those areas. Members will notice that a large number of those areas aren't able to be concluded, but I can update members that the majority of each of those pieces of work has been complete. There are small areas which are outstanding. So whilst we aren't able to formally conclude in this report, we are making better progress and we are getting closer to completing each of those areas. I don't propose to go through any further detail, but I'm more than happy to take any questions that members have on the detail in the report.
Thanks, Beth. I'll open the floor to Andy.
Thank you, Chair. Page 19 on Grant Thornton's and page 27. Financial statements, key findings arising from the group audit. It's concerning the Opium Power Limited. There's obviously three companies involved with that, obviously, which is it's a trading company of South Somerset District Council. I obviously don't want to stray into confidentiality things because obviously it's under various things at the moment. It says no significant issues were identified, but then it says that the adjustments to basically it says that the income and expenditure, obviously, which is the profit and loss account of 2.1 million in one company, 2.4 million and 586,000 were posted. Now, for such a relatively small company compared to the Somerset Council as a whole, that are quite significant figures. And if you're talking about the profit and loss account, it doesn't say whether it's income, i.e. understatement of income, or it's actual expenditure that's actually not been put into the accounts. But to my mind, they are significant sums of money for a small company, but it doesn't really tell us a lot what the problem was. Is it income or is it expenditure? A bit of both, because that will actually affect their accounts. I would have thought quite considerably. It's, you know, totaling up nearly £5 million.
I'm happy to take that, Chair. Apologies, it should have been clearer in the narrative. The significant issues relates to our review of the component auditor's work. So we're saying that we didn't identify any significant issues with the work that was undertaken by the individual firm, Old Mill, who are the auditors of those component entities. So we didn't identify any issue with the level of work that they'd undertaken or the quality of work that they had produced. We did, however, identify that they had identified some adjustments. Because those adjustments are large, as you say, they have therefore, they are required to be processed in South Somerset's updated set of group accounts so that the group accounts are materially accurate, so which is why we've reported them to you. There are a number of different adjustments that were identified in relation to a number of different areas. So it's not just revenue and expenditure, but there would be deferred revenue as well. There were some amendments too. So we were trying to make the report as digestible as possible by summarising the total bottom line impact that this would have on the group accounts. But the detail would be available through the detailed Old Mill findings reports if you were to request copies of those.
Yeah, come back, Nikki.
Sorry, can I just clarify as well? When Beth says that Old Mill are the auditor of SSDC Open Power, can I just clarify as well? They actually produce the accounts. Then they're not produced by in-house. So those accounts are produced externally. What we have to do is receive a set of those accounts to then feed into our group accounts as a council.
So you're saying they haven't actually been audited because their accountants do their accounts. They don't do the audit as well, do they? It's got to be a segregation of duties between the two.
No, they can if they have a separate department that does auditing. They are able to do the production of the accounts and the audit as long as those departments are completely separate.
Okay. Happy with that, Andy?
Thank you. Yes. Yeah.
Will?
Thank you, Mr. Chairman. As you know, this is my first meeting in the Audit Committee, so I'm going to probably be asking some rather naive and very naive questions. I'm interested in the report on page 20, which talks about the non-rebuttable presumed risk of management overrides of journal entries and things like that. And then that's taken alongside an absolute rebuttal of fraud. Now, without knowing the nuts and bolts and the details of it, that seems to not scan very well in my eyes. So, but I must confess, not understanding how the process works, I would like a little bit of clarification that if management can override journal entry, I mean, it sounds like a bit like Horizon, doesn't it? You know, hopefully not. Jason started palpitating. No, but you know what I mean. If somebody enters something, now clearly mistakes are made, but equally you would expect somebody who's the data inputter to actually correct that themselves rather than have it corrected by management. So I'm slightly concerned that in terms of overall audit control, if somebody else can come in, alter a journal entry, and without wanting to dig up old history, I think there have been issues in South Somerset in the past. I just want to understand how that works and how fraud, if you like, is prevented. Is that a reasonable question to ask?
That's absolutely perfect question for Audit Committee. So I'm going to get the auditor's view and then I'll get the management view. Okay.
Thank you.
Barry?
Thank you. A great question and spookily similar to one that I had a couple of days ago at another authority. So you're right, indeed. So you're right around the presumed and non-presumed risk. So if I can go through those. So the ICE's international standards and auditing are written for both public sector and corporate bodies alike. So what we do is we look and we consider those in relation to the application to public sector entities. Now, in terms of management override of controls, that's non-rebuttable. So we have to do work around management override controls. So what we assume is that management will put in a robust control environment, that they will produce their accounts in line with reasonable and reliable estimates. And then we look to see how they've circumvented those controls. So basically we're saying, put this arrangement in place. Now we're going to look to see how you've got around those. Now that will require us around the estimates. You'll see us do lots of work by testing that. So we have individual experts, auditors experts, looking at items like the property, plant and equipment valuations, which is set out in the reports, and also around the actuaries, around the valuation of the pension fund liabilities. Now, in relation to journals, we look at every journal in terms of we bring that into a piece of software that we've got, and then we determine a number of high risk criteria. So, for example, we would look to see if any journals have been processed by Jason or by Nicola as senior officers, because we would think that that would be inappropriate with their role, and if they had processed a number of other of those routines that we look at as well, such as transfers between capital and revenue to see whether or not there's manipulation of that year-end position. We then look at a whole range of characteristics, and then risk assess those as well. So what we're doing is we're focusing our audit work on the high risk journals to identify if there are any issues, irrespective of their size, but again with a focus on the material ones and also those that are processed close around the year end. So that's how we gain assurance over the journals that are being processed to make sure that they're appropriate and there's no manipulation of the financial transactions. So that's the management override, and that's the that ISA resolved. The ISAs then go on to say, if you're in the corporate space, there's always an expectation that you will manipulate your position to enhance your profits at the end of the financial year, because you've got stakeholders and shareholders. Now, in the public sector, that doesn't really work because you don't have shareholders in the same way. You have got robust controls in place. You've got the use of reserves. So actually, if you make a deficit in 1 year, that's then met from reserves and the budget is just set to change that. So the incentive for fraudulently manipulating revenue recognition isn't necessarily there in a normal year. Now, we didn't rebut it in prior years. So when we had COVID, there was the risk of manipulation of COVID grants coming in to inflate that. So we didn't rebut the fraud assumption in revenue in those years. But in a normal year, we would say there's a robust enough control environment that we don't need to have specific focus on fraudulent transactions, but we of course still do lots of other work around revenue and expenditure to make sure that it's recognised in the right year. And you'll see that through our work on grants, fees and incomes testing and all the other areas to make sure. And again, what we do is we focus on those period end balances to make sure that they've been recognised within the right period. Does that help?
Yes, thank you. May I come back? There's a couple of things in there. Firstly, presumably, every local authority has a financial management manual which sets out the rules by which the financial management system is operated, who has the various clearances, etc., etc. So that's your guiding Bible in terms of who's entering and who's overriding, if you like. So there must be circumstances in there where an override is permissible and clearly where it's not. You then went on to talk about clearly corporate entities have a vested interest. Perhaps I didn't mean that, but there is a risk that corporate entities may big up their figures in order to make things look a little bit better than they reasonably are. Do you consider that in the current local authority landscape, with Section 114s popping up or being seen as a risk across the piece, do you think that is an emerging risk for local authorities?
I think one needs to look at the types of revenue that the council receives and therefore the scope for that to be manipulated in a material way. So again, lots of income will either come through the form of grants, which we can go back to grant letters. It will come from council tax or national business rates. So again, there's robust systems in place that we look at there to make sure, but again, they're fairly standard and they're low level amounts. You'd have to manipulate a lot of them to get to position. Then you've got fees and charges as well. So again, what we do is we look at the individual types of service income and income that's come in to see whether or not what the risk of fraud is in those. And again, we don't rely on them, but we also have regard to the work of the internal audit and the fraud program that they have to see if there's any identification. So the ability to manipulate revenue is much more limited within a local government setting, just because of the nature of the types of income that you have. So that's why we rebut that work. But again, I do want to just emphasise that doesn't mean that we don't look at it. We do lots of work around the recognition of income. And if we did identify any fraudulent transactions, then obviously we would highlight that and we would extend our work as appropriate. But as a principle, we don't believe that there is a significantly large enough risk of fraud in revenue that we would do it. But absolutely get the fact that, that there is an increase in the financial challenges, and that may mean that there's more manipulation. I mean, Jason would then probably come back with a view of well, if I manipulate the position, all I'm doing is kicking the can down the road, and I'm going to get found out at some point.
Sorry, just before we come back, Jason, did you want to respond there?
Yeah, just two things. So, give members assurance. I've never done a journal. I don't know how to. I don't have access. They wouldn't let me. I haven't got the skills to do it. So, no, I don't authorise them. No, I don't get involved in that level of detail. So, that fits in with the whole control environment of who does what. Just taking your wider point about risks and that, I think councils generally with issuing 114s or getting close to it, there perhaps is more pressure on or Section 151 officer to perhaps not declare things. I think if you look at this council, look at how open and transparent we've been with our financial position, I don't think that's a risk for us. Some councils perhaps downplaying their financial positions. So I think we've taken a very different approach here, but the systems and processes back that up as well.
But it would also be a risk for you individually as the 151 if you were to do that, Jason, wouldn't it? Because you've got your professional registration on the line.
Indeed.
Yes, Quill, and then we're going to move on.
Yeah, okay. I've now forgotten what I've lost for stone. Yeah.
Yeah, so I've got Habib. Mandy, do you have your hand up as well? Yeah, so Habib and then Mandy.
Thank you, Mr. Chairman. I think Barry mentioned a normal year. I'm yet to see one of those, it's what I see is one financial challenge after another. Over the last few years is that, that's the reality. But on a serious note, we still use SAP in some instances with HR and payroll system, I believe. Now, I understand a year ago, most of
this is for South Somerset, Habib. So
sorry, still it's page 92. Unless I'm mistaken. On the key matters.
Is that the EFA you're looking at? Table 6?
Changes in IT systems. Page 92, I've got it.
The South Somerset one.
Yeah, it is in the yeah. Just look, it's on the
page 92 is the pension fund report.
All right.
Okay.
I'll come back to it.
Can we come back to it later when we cover that item? Yeah. Mandy?
Thanks very much. I think for me there is an unease with getting these signed off. It's fair to say and be honest about that. We're here as a committee to try to sign off accounts, and there's a lot here that hasn't been worked through yet. But that has to be balanced with the practical position we're in. So yes, I'm uneasy, but I also fully appreciate and understand we really need to get things signed off so that we've got that baseline for the new council, and without them all being signed off, we haven't got that. So I appreciate that fully. So just a couple of questions. If something substantial was found, it's always possible, or the rules could change, or something else could come out of the woodwork. What will then happen? You know, how much discretion are we allowing the officers? And the follow-on question is there a point of an audit committee? You know, we are handing over, you know, a couple of things to do here in the signing the letter of representation and signing the accounts off. So just a question, could we do that with every set of accounts?
Okay, so in terms of the position, I think I also share your concerns. Technically, the delegated authority would be to me to sign off as chair of the audit committee, and it does feel uncomfortable to have so many outstanding actions. That said, we've got to find a pragmatic way forward, and I think that if anyone's got any bright ideas about how we can do that without following this plan, then I'm all ears. But until then, unfortunately, we've got to try and make the best of a difficult situation here. Now, obviously, the position for Somerset Council is quite different to the position of other councils. You know, I'm aware that, yeah, I think when Bedfordshire merged, no, Buckinghamshire, but when Buckinghamshire merged, I think they're still waiting to sign off all of their predecessor authorities. So, you know, we're in a position where we've actually got all bar one signed off at this point. So it feels like we've made a lot of progress, but the difference between success and failure here is quite drastic in terms of the opening balances on the new Somerset Council 23/4 audit. So yeah, I share your concerns, but I'm just not clear about how we can move forward. So Barry, firstly, what would be the fallback position if we can't agree to the proposal here? And then Jason, practically, does that present you any problems from a finance team?
Chair, for clarity, I wasn't saying we don't support it. It was what if something comes up that's a bit more substantial.
Yeah, so I think it's a really great question, Councillor Chilcott. I think as I've said, our threshold is materiality. So that's just over £1 million. So if we identify an error or an adjustment that's over £1 million that impacts the council, then all bets are off. We come back to committee. So this isn't about, we're now talking about amendments of a few £100,000. Still a lot of money, but again, it's not that material amount. So if we identify a material error, then we come back to the council. But what I would emphasise is that the audit committee is very important, and the challenge that you provide is absolutely critical. So there's no way that we should be suggesting that it's not legitimate for the reports to come back here. But what we would be doing is actually the report would be discussed and finalised with officers, so they would already be aware of what the adjustments were. So whilst the accounts would still be subject to approval, in many ways the officers will be able to say, okay, well, we know what the final position is as far as the audit is concerned, and we can now start working on that basis, that the committee will approve that because there's been that formal reporting through. So in terms of what the impact is that for me, the critical thing is just getting the audit work and getting to a position where we've got a final set of accounts where officers and ourselves have got confidence in the numbers. And then there's the appropriate governance arrangements to go through to make sure that those accounts are properly approved and signed off.
Do you want to ask a follow-up, or do you want Jason to come back first?
I would acknowledge to say this isn't where we want to be. So this is your 10th, I was just adding it up, your 10th set of accounts you've had since starting this council this financial year. That's pretty unusual. And we've got the troublesome one left to do, I describe it as. And God, I want to get this one over the line. There's a big prize in getting this over the line in terms of the impact for Somerset Council. It's additional audit costs going forward, the uncertainty and all the rest of it that brings in. In terms of, is it important accounts come before audit committee? Absolutely, Mandy, and the challenging questions members provide. That's why, as a sector, you know, if I look at some of the other councils around us, you know, Wiltshire, I think, has still got 1920 outstanding. they will not get their accounts for those next couple of years signed off by their members. They will hit the backstop. Those accounts won't go through. There's no public accountability at all. I think that's really poor as a sector. I worry for the sector in terms of that. We've got ourselves into this position. In terms of Barry's already set out, there is a materiality level that we can't do any adjustments, but that all bets are off. They would have to come back. I would hope we work through these pretty quickly because we have some practical things with our auditors' time in the NHS and that. So we really do need to hit this very, very quickly. We have put in extra resources around this in extra checks to get some of those reds and ambers sorted through and make them green. If there's any issues, even if they weren't significant, I would come back to Audit Committee and highlight what we have changed and what's gone through anyway, even if the delegations are in place, because I think that's the right thing to do. We will bring the accounts back, etc. So I would submit by saying I don't want to be here either, but I can't see another way round the problem we got. And I think the other option is we don't do anything. We just don't get these. We hit the backstop. We deal with that like virtually 90% of the councils in the country in that position. I just think that's even worse for the residents of Somerset, actually.
Just to mop up then, so we all understand where we're at, we all want to move forward, I'm sure. So but at the moment this report's in the public domain, which shows a lot of red. So if you go through and you make the decisions and they're signed on, will there be something in the next committee meeting to say, look, these reds are green? Where's that follow through, I suppose, for the public to see?
I'm assuming the final report will come back to the next committee so that we close the feedback loop for members of the public.
It would have been nice to have seen that in the recommendations, actually, to say that we note that it will be brought back to us.
Beth, can I just ask you, are there any specific areas that are outstanding that remain of high concern to you? Is there anything in there that you think is going to be a real difficult nut to crack?
I think that the biggest areas of concern are probably some of the property queries, primarily because of their complexity and the length of time that it can take, not only for us to do the work once we've received all of the final evidence, but the length of time it can sometimes take to resolve some of the issues. We've definitely made progress in the last week since we submitted this final report on Monday morning. So that's only 3 working days, really, because I've not spoken to the team this morning as I was driving down here. So there is progress being made. I just wouldn't want to say with absolute certainty that everything on that front is fully complete at this stage.
Nicola?
Can I just add as well, I'm not particularly popular at the moment because I'm pushing really hard on this across all of the teams. The property team, they're coming back. The in-house finance team have worked weekends to get samples back. We are pushing the team really hard, the importance of this. So I will owe significant amounts of alcohol or cake or something if we manage to get this over the line. So yeah, please be assured that we are
the Bribery Act.
We are doing all that we can, and officers have gone beyond above and beyond on this. And obviously we've just got Graham is in the room today who is leading on this, so he is just going to finalise this for us to get this through in April. So yeah, just wanted to reassure we aren't taking the brakes off this. We will get it done and then provide that report back to you in May.
And are you I'm not going to say comfortable, because I don't think anyone's necessarily comfortable about where we are. Are you content?
I'm practical. I know the team have to move on. I know it's been a hell of a year for everybody with everything. And I think actually we probably exceeded my expectation on where we would be in the here and now, if I'm honest. I was just looking at recommendations, just whether we could add something on somewhere just for that reassurance that it's going to come back somewhere. That was all, just to close that.
So we will definitely take that as a formal recommendation that the final report comes back for both oversight and transparency. Yeah. Gwyl.
Yeah, I'll just make a sort of final comment. I mean, I think audit is a bit like death and taxes. It comes around every year. So it's going to come. So it is concerning that
we've had a lot of death and a lot of taxes in this last year.
But looking at it dispassionately, it is of concern that we are behind on these, without a shadow of a doubt. And Jason has said this is potentially a sectoral problem. I would hate it to play into the government narrative that the local authorities themselves are incompetent and dysfunctional because they can't do this. So I do need to understand to what extent the delays are a result of what you might call normal business, and to what extent they've been compromised by the movement into a single authority. Because the movement into a single authority is going to clearly throw up a lot of challenges for everybody. Actually, once we got here, once we got over the line last April, we discovered a whole load of other new challenges, which have resulted quite clearly in a significant tightening of financial control across the one council, which I'm assuming was not in place in the legacy councils. Now and again, you're looking at external scrutiny of all this. Is actually, are we good enough and tight enough? Or were we, or are we? Does that make sense as a sort of comment question? I'm not almost challenging in a way, because we've got to get this sorted. I really share. I came here with the full intention of voting against allowing you to sign this off, because this, surprise Spain hasn't sued for copyright infringement on this report. So many reds and yellows on it. But I mean, I do accept the pragmatism of the situation. But if Jason could just give us some as a newbie, some assurance.
Jason will provide that assurance, but just to let you know where we are as a council, I think I'm right in saying there were about 1% of all authorities in the country that had up-to-date accounts. We've gone through 10 sets of accounts this year, which is 5 years worth of work in the last 9 months, which is a phenomenal testament to the work of the finance team and the audit committee working together, and our auditors, of course. As much as it feels like we're behind, South Somerset, I never had a single grey hair on my head until I started dealing with audit at South Somerset, simply from the point of view that it's slightly more complex because of the types of assets that the authority held versus some of the others. We're not talking about office buildings. So it is naturally a little bit more complicated than some of the other predecessor bodies. So it does have a reputation as a little bit of a problem child, but I think that's not necessarily down to any structural failure. I think that's down to the content that we're having to deal with. Sorry, I've got Jason, I've got Liz, I've also got Graham, who welcome Graham to come.
Yeah, just to give you some sort of assurance and perspective, Will, believe it or not, I guess we're sitting quite smug compared to lots of councils, despite what we've got in front of us. Yeah, we inherited the position on the 1st of April. We had one set of 2021 accounts outstanding, 3 for 21-22, and 6 produced for 22-23. We've actually, remarkably, this is the last one that's still there. Last time I looked, there were 3 county councils accounts have been signed off this year, of which we were one, and it's about 20-ish districts, somewhere around there. And clearly we're a number of those. So believe it or not, actually, we're in quite a good place. But I think it just shows how bad it is in the sector. In terms of the problems, it is a sector-wide problem. There has been issues with auditing in terms of the availability of auditors, the fees that have been charged, and the work that's expected by the increasing standards that's been placed on the sector. And I said it quite openly a number of times on stuff that actually really doesn't matter in terms of a lot of the public. When we talk about the services on our school playgrounds and how we value them, I'm not sure what difference that makes, but from the auditors, they really do have to do that. Otherwise they get pulled up in terms of the FRC. I think we've lost perspective for what really matters from the public purse side of things, and what really the public are looking for an assurance around the council's in a safe place and doing all the right things. I'm hoping that some of the stuffs that are starting to put in place will start to sort that as a sector, but I still think, if you read the accounts in detail, some of the stuff in there is a bit meaningless. We touched on the pension stuff earlier. which pension valuation do you want? What we really pay in cash, how it's valued at 31st of March, the triennial valuation. There's so many different figures floating around. Actually, I think it just goes over most people's heads and it doesn't focus on the right things. So it is a sector-wide problem that really is in a bad place. Some of the things that have been put in place will help it, but I don't think solve it. And I do find it worrying that we are going to have this backstop nationally, and loads of accounts are just not going to get signed off. I think from a public perspective point of view, that is a disaster. Really is.
Gives government a big stick too.
You can see why I'm pushing really hard to get this one over the line, because one of the accusations against us as a council of you're not managing your finances. If you look at the traits of the councils that have issued Section 114s to date, there's one common thing, apart from they've made some really daft decisions in a few places, they all have outstanding accounts generally. We are not in that place, so hence why we've worked so hard to get that.
So I've got Liz and Graham. Graham, was your point? Do you want to come in now, or do you want to wait till Liz? Liz?
Thank you, Chair. I just wanted to make the point that if we were not in this position today, if we were in a considerably worse position, which could have happened without this incredibly diligent working, I would then be much more worried about the financial future of this council. So I'm worried enough as it is. The bit that I'm finding really interesting listening to the debate is what was predictable at the time that local government reorganisation for Somerset was proposed and then came through from the Secretary of State, and what was unpredictable at that time. So we knew that all of these sets of accounts would need to be signed off. We knew that we would lose corporate memory. We knew that not every member of staff from the predecessor council would still be with us. So there are also a couple of other things that have come at the same time as LGR. One of them was the movable for districts towards commercial investments. And the other one was the amount of government money coming out for regeneration projects. So those two things have added another really big chunk of work for finance teams and auditors that perhaps if we'd been, let's say we'd been looking at LGR back in whenever 2009, 2016, when other Southwest councils went to unitary, some of those factors wouldn't have been there then. The financial pressures wouldn't have been there then. So I just want to add my tribute to the incredible work of all of the finance team here and the predecessor councils, because you'll recall when we had the review of reserves, we saw what came through from all the predecessor councils and from internal and external audit, because I think if you wanted to make a list of challenges, you'd probably look to Somerset for the kind of template of the list of challenges. But I would be very much more worried if we were not in this position on the statement of accounts, because we would not then have the clarity of the opening position of Somerset Council. So my thanks as well. Thank you, Chair.
Graham.
Thank you, Chair. Firstly, apologies for my lateness. It was flooding on the line on the train down from London this morning through this lovely weather we've got. So it was just really coming back on the question you asked Beth earlier, and it was just really again from the SSD Somerset Council point of view, what we've got outstanding, and I will caveat to this is that once we send queries back to Beth and her team, they've then got probably 50% of the work, or if not more, still to do to verify and check what we've done. So it's like the swan beneath the legs. But as of last night, all bar 10 queries at that point, we'd returned to the audit team. That may have gone up because there might have been some follow-ups this morning from that team. And of the samples, which is an absolute key element for Barry and Beth and team, all bar one had been sent back. There were some follow-up queries that naturally come back. So I just wanted just to set the context from what the Somerset team have been doing and working in partnership with the auditors on that. Now, that's notwithstanding anything that Beth has said. They then have to do the work to verify what we've given back and that they're happy with that. There's like 50% still to be done, but that's the context. The other just point I'd make, and a bit like echoing something of what Jason said in relation to most other audits across the country, is if I look back to when we actually properly started 22-23's audit, which was the first part of January, actually to get to not the finished post yet, but I think where we are at the moment is very, very fast indeed, and testament to the Somerset team that have been working, and testament to Barry and Beth's team who have been working. So thank you, Chair.
Thanks, Graham. So are members content that we now move this to a resolution? Is there anything else that you want to kick around? Because time is short and there's still plenty to get on with. Okay, so I'd like to ask members to note the latest audit findings report, taking Mandy's point that the final version will come back to audit committee for reference and noting next month, in May. So we'll be noting the statement of accounts as they are, and we're requesting delegated approval for the final accounts to the Executive Director of Resources and Corporate Services in conjunction with the Chair or Vice Chair once any outstanding matters have been resolved, provided they are below the materiality threshold. Okay, a seconder? Yeah. All those in favour? Any abstentions? No. Anyone against? No. Thank you, everyone. And can I get delegated approval to sign the letter of rep as per the previous caveat? Yep. Proposed Simon, seconded Andy. All those in favour? Any abstentions? And anyone voting against? Carried. Thank you. So by my noting, that's actually quite a big milestone for us as a committee now. We will have cleared, as I say, 10 sets of accounts, which feels like I owe you all dinner.
Where do you want to go? Here, the Castle Hotel is very good.
To be confirmed. Sorry. Well, there's Pizza Hut over there, so. Look, so this is genuinely quite a big milestone for the council now. In closing all of the outstanding audits, we closed down a lot of potential risk for the opening set of accounts for the new authority, and it helps us to start from a solid bedrock when it comes to the next audit cycle. I think the way the audit committee has worked this year, I'm sorry, has been relentless, but my intention is that we can spend a lot more time diving into the detail and doing the quality work that we need to do, particularly to look at prospective issues, so how we improve things for the future than we've been able to do over the last 9 months. That's my plan, and we can talk about what your aspirations are going forward. But for me, this is quite a big line in the sand now, that we can draw a line under everything that's gone before, and we can move forward as a new authority into the future, which is what I hope we're all here for. So thank you to Beth and to the audit team and to the finance team for the ongoing work with the South Somerset stuff, and I'll look forward to that coming to a final conclusion for the last time. So if I can ask members to bear with me for a moment while we move through the Somerset Pension Fund audit plan for the year ending 31st of March 2024. Jason?
Don't really have a lot to add to this. It's the kind of standard report, but I'll hand over to Julie, who will no doubt take you through a bit of detail on it.
Chair, thank you very much. And just to show that we are obviously keeping that momentum on trying to move things forward for the new audit cycle. Delighted to put in front of you the audit plan for the pension fund for the 23-24 year. Whilst it's contained within the accounts of the council as a whole as the administrative authority, it's a very distinct, discrete piece of work that we have to do around the Somerset Pension Fund, and that we're in a position that we can put the plan in front of you. You'll see from the plan there's a number of things I have to communicate to you, those being the sort of significant risks for the audit. I communicate our current planning materiality levels. Obviously, we'll revisit that based on the data we get once we receive the draft pension fund accounts. And then you'll see a bit at the back of the plan that sets out the sort of the logistics and timeframes. And it's really important that, particularly from the pension fund point of view, that we hit the ground running as early as we possibly can, because we as a pension fund, or my team as a pension fund, need to provide assurance to Barry and to colleagues who have to do the work for the Somerset Council, because part of those pension numbers then will flow through to the valuations that feed into the balance sheet for the Somerset Authority. So we always try to look at getting the pension fund audit out of the way first as a matter of course. And you'll see in terms of the risk assessment itself is broadly consistent with previous years and where we've had to position those significant risk areas. And it's along a very similar theme to some of the items we've been talking about already. So you'll see that there is that continuation of that presumed management override risk, which we have across all audits. But the other two key areas of management estimation within the pension fund is around the valuation of your level 3 classification of investment assets. Clearly, the fund has an enormous amount of assets that it holds for the fund as a whole, but the level of audit work that's required on that depends on how easy or how hard they are to actually determine a valuation to go into the accounts. And so when your officers prepare those accounts, they're given categorizations based on what the Code of Accounting Practice requires. Level 1 is the really easy stuff. And that is where, you know, they can basically just take prices straight off a stock market price, very easy to verify based on latest prices quoted. Your level 2s, you've got some good reference points. You can't go it's not as precise as the stock market prices, but you've got a good basis of comparable data that you can use to form basis of valuation. But the really hard stuff where the more judgmental elements is involved is those level 3 investments. And for this fund in particular, you've got quite a few private equity investment funds that are within this level 3 category, where we have to rely on the audited accounts for those individual funds to help inform the valuation in terms of the price per unit, which we will then verify as part of the work we do around that. So that's an area of significant judgment estimation. So that's one of the areas we flag as a significant risk. And then finally, the actual liability for the pension fund as a whole. We've talked about already about the process the actuaries for the fund go through to do that triennial valuation for the purposes of determining the contribution levels. But for the purpose of the accounts, they do a very specific accounting valuation individually for each body, but also for the fund as a whole, they do a valuation. And then that can be disclosed in one of 3 different ways. You can either have it as a separate accompanying report to the fund, you can have it as a disclosure note to the accounts, or you can have what Somerset does is actually quote the overall liability on the face of your net asset statement. And so we have to do work around what the actuarial valuation has looked at, the key assumptions the actuaries use to form the basis of that liability, because it's by far the biggest figure in your net asset statement. So that's the main risk areas, Chair. As I said, the rest of the plan follows a fairly similar format to what members would be accustomed to from various reports you've seen from us over the last few months, but I'll stop there and open out for any specific questions. Thank you.
Thanks, Julie. So I've got Andy first, and Habib had a question on the IT systems, and I've got Simon.
Right, thank you, Chair. Page 11 on Grant Thornton's page 99, where it's talking about significant risks to identify. One of the significant risks then is the valuation of the pension fund's gross liability, not the actual pension fund as the pension fund, but the liability what its members obviously would be accrued in the future. Now, the fund has chosen option A. So obviously there's various options which you could choose, which would give different values. So who decides on the option of the valuation? Obviously there must be option A, B, C, D, E, F, or whatever there is. And what considerations are used to guide to what option is selected? And So what is left, and the value could change, you know, because we've got a £3 billion potential fund, maybe that's the liability. So if you used a different ABC, you could, you know, the valuation could of liability could be, you know, a few £100 million different. So who decides on this categorisation of option A of those various things? If that makes sense. Thank you.
Through you, Chair. The choice of option doesn't actually change the valuation. This is purely about the options give you a choice as to how you present that valuation in the account. So the valuation will be determined by the actuary, and that is not in any way affected by the option that is chosen by any individual fund. So it was the three options I just talked through. So option A is the actuaries will prepare their valuation in terms of this is the total liability for the fund as at the 31st of March 24. The actuary prepares a separate report. So option A is that they could disclose that valuation completely outside of the accounts in an accompanying actuary's report. Option B is the notes, there would be a note to the accounts in the pension fund accounts to say this is the valuation of the liability, and it wouldn't feature on the net asset statement. Or option C, which is the council's option it's taken, is it's put that liability into the actual account. So it's in your primary statements for the pension fund. So just to clarify, the option choice is purely a presentational one. It doesn't in any way change the valuation. No problem.
Okay. Habib, do you want to restate your question about the IT?
I do. Thank you very much for the opportunity. I was just referring to the SAP system area and HR and payroll system. I think we sort of transferred to Microsoft Dynamics 365 about a year ago, almost, you know, and yet I think that SAP system hasn't moved in. What are the implications, and when are we likely to sort of see that move? That's one question. The other question is actually on the national context with DLUHC and the funding positions. I expect they want us to just invest 5% on the levelling up in the UK. And what plans do we have just in case if that doesn't go with the new governments? Do we actually foresee any problems in the future that we can actually tackle now? Thank you.
Chair, if I could just start, and then maybe I'll revert to Jason just to follow up. In terms of the changes in the IT system side of things, in the context of the audit of the fund specifically, we've put that in there as some background information, but in reality, what it will actually mean for the pension fund specifically, it shouldn't impact from a payroll perspective the fact that the payroll system for the council is still on SAP, because actually for the pensionable benefits, there is a separate module in the Altair system, which is the pensions administration system, that actually deals with the processing of the pension benefits. So they use that payroll route rather than the SAP payroll route for the purposes of the pension fund. So in terms of what impact that will have on the audit, I'm hoping it will be a limited impact. I mean, we're currently, as part of the interim work at the moment, just understanding the broader transition to Microsoft Dynamics, just in terms of the broader audit of the fund and how those transactions may feed through to the draft accounts. We're working through all of that sort of understanding at the moment, but certainly from a payroll perspective, it should have a limited impact as far as the fund is concerned. But Jason may want to come back a bit more about how the broader transition of the systems are going.
Yeah, but if I can just add to that, so the finance system is Microsoft Dynamics, so that is the system across the council now, replacing the 5 predecessor systems. We still use SAP for the HR payroll system. There is a project looking at that, of potentially transferring that. Was always part of the original project. That has been paused, so Alan Jones is the lead on that area, but that has been paused for the moment whilst other things are happening in terms of reorganising the council, downsizing, etc. But that project will need to be taken forward at some stage, because the SAP licenses and SAP itself in terms of the support does actually run out at a point in time. So that's a paused project to move to payroll side of things. That's an option that needs to be taken forward still.
Okay, happy, Habib? Yeah, Simon.
It's a comment more than anything else. Firstly, I hope people have noted that the pension fund is currently just over £3 billion, which is a very, very good position to be in. And the first time we've hit 3 billion, which is a very good thing. And wearing a slightly different hat for 30 seconds. Apart from worldwide conflict, the biggest concern, which may be slightly fading, is government interference in how pensions invest. And that's the biggest concern currently. There will be instructions that you will invest X amount in what apparently is a local area, or when you're part of a pension group of pension, that local area extends from Birmingham to the Isles of Scilly. What is local within that? So that's the concern, is local isn't local. But we are actually in a better position than we might be, and hitting that 3 billion point is a very significant place for the pension to be in.
Thanks, Simon. So I've got a question from Mandy, and then I'd like to try and wrap this one up if possible.
A very quick question. Just picking up on page 423, you talk about Altair as administrators, but I've never come across Altair. I'm thinking it's the system as opposed to Peninsula, who do administer. I've not come across it before, but when I read it, it felt like Altair were administering. That's the first question. Second question, it talks about efficiencies undertaking work alongside the Devon Pension Fund. And I'm just trying to understand what efficiencies, can you do two things at once when you're doing that? And the third question, which is probably an odd question, but a lot of our pension fund isn't managed by Peninsula effectively. We've got another organisation that manages most of our funds. And what I haven't really got eyes on is how much we're looking after in-house, how much is out-of-house, and where that auditing of the other company that manages it is. That I've never thought about it before, but we don't have oversight of that here, and should we, is my question.
So as Brunel is the other entity that looks after funds across different authorities. Julie?
Yeah, thanks, and thanks for your questions. So just to start off in the context of Altair, so Altair is the software system, and actually, just to give some context, it's probably a system that's used by not all, it's probably certainly at least I would say about 95%, if not more, of pension funds nationally. So it's a nationally recognised pension software that the pensions administration team, Peninsula Pensions, use to administer the day-to-day processing of benefits and capturing all of the membership data for the fund as a whole. So absolutely, Altair is a system rather than an organisation in terms of us looking at the operations of that. Where the efficiencies come in is Peninsula Pensions as a service organisation administer the pension funds side of things for both Somerset Fund and Devon Fund. And so what you don't want is two sets of auditors go into Peninsula Pensions asking the same questions about how those systems operate, the controls in place, the IT infrastructure around that, where we get assurance. So what we make sure is that as a pool of pension fund auditors, because both Granthorne cover both Devon Pension Fund and Somerset, we work effectively together to effectively make sure that we only go to Peninsula once and ask the questions once to help give assurance in both funds, rather than ask two sets of auditors to go and ask the same questions twice. So we try and make sure that we align the work that we're doing across both funds, so that we're just looking at that as a single service organisation rather than two separate audits.
Jason?
Yeah, just about the second part of your question, Mandy, in terms of pensions, so if I call it the pensions administration, that's what we do jointly through Peninsula with Devon County Council. Works together as one, staff employed through Devon, etc. In terms of the investment of the pension fund, that is done through Brunel. We're one of 10 partners in there, 9 are councils and the Department of Environment's the other one. And as Simon said, we've always £3 billion there. We actually have the highest percentage actually given over to Brunel, and Anton will bang me on the head because I've forgotten it, but it's at 95-ish, somewhere around there. I can't remember it precisely, but we've pushed more that way. So we do very little in-house management of pension funds now. It's done through Brunel. Obviously, the pensions committee oversee the asset allocations and that within that, but it's Brunel or do the direct management. So we don't do pension fund deals and lending money out ourselves in the way we would have traditionally done it a few years ago.
Just to follow up, it's how that we have that control and check on that interaction between this council and Brunel, and that's the bit I'm not cited on.
So that is the pensions committee. That is the role of the pensions committee to.
So I've got the chair of the pensions committee who'd like to come in.
What I'd say is we are quite active in that role. Please come to the pensions committee. Come with your questions. You will be more than welcome, Mandy. Be more than welcome.
It's the audit element of the pensions committee I was inquiring of.
Yeah.
So Julie's about to put us right.
Yeah, so just to give some assurance to the committee, and it's actually helpful that Beth is here as well, because Beth looks after some of the other pension funds across Brunel. So actually, as a set of auditors, we look after 8. Is it 8 now? 8. So under the new contract, we actually look after the pension fund audits for 8 of those pension funds that Brunel are managing as a collective. And actually, we started introducing some new procedures in the prior year to actually, again, gain some greater efficiency about how we operate as a set of auditors, because what we actually found was actually there's a lot of common ground here, where if you look at the investment portfolios of Somerset pension funds, say to Devon pension fund, to Cornwall, for example, whilst it's not everybody will have their own individual investment strategies based on where the fund wants to take that direction, actually there is also a lot of common ground. So certainly we've identified there's probably at least 50%, maybe even up to 2/3 in some funds, where actually you've got some consistency between the investments that each individual funds are choosing to hold. So what we've tried to do is sort of re-engineer how we're approaching it from an audit perspective, so that Brunel, again, isn't getting 8 sets of questions from 8 sets of different pension fund auditors. We're actually saying, okay, well, we've mapped across the 8 funds where the common ground is in terms of those funds. And we sort of say, well, rather than asking for a set of audited accounts for that fund 8 times, we're saying, okay, well, we know 6 out of the 8 hold this fund. We'll do the price testing once and we'll apply those principles and share that information across the audit. So we very much have got a very good active relationship with the investments team directly now at Brunel. We've already had our initial planning meeting with them a couple of weeks ago just to work through the logistics. And so we've got a very set sort of timeline as to when they will release the initial tranche of investment data to us. And then we'll work out a very specific investment testing strategy to help minimise the burden on Brunel as a sort of an administrative office in terms of how they manage those investments, but also that we're getting the efficiencies our end in terms of asking for the information once, but using it multiple times across the different audits.
Mandy, happy?
Thank you. I understand Brunel fully. I was there when it was all brought together originally, actually, which isn't that very.
Brilliant. Right. So are members happy to note the Somerset pension fund audit plan? Yeah. It's not requiring a formal vote. It's just really for noting. Thank you, Julie. Thank you, team. Are you staying for the rest of the meeting or are you disappearing at this point? Okay, perfect. Alistair, I think this is over to you for the internal audit progress report.
Thank you, Chair. Yeah, so this is the progress report on the internal audit plan for 23-24. Just firstly to Councillor Wren, unfortunately, I haven't set you up on our audit board system at the moment, so a number of the links in the system on this paper won't work for you where there's additional information. So I will make sure that gets sorted so you have that additional information at your hands in the future. If councillors can first turn to agenda page 116, this just gives an overview of the audit plan to date. There is one limited assurance audit to bring to your attention, which is around direct payments in adults. The other things I'll draw your attention to here is just there's a number of outstanding recommendations, priority 1 recommendations, which we need to keep an eye on and make sure those are implemented. So just picking out the key bits for your information, agenda page 119 provides an overview of the current recommendation tracking database. There is a link in there for you to drill into further information, and we do track those recommendations and chase up on responses where necessary. The other thing to draw to your attention is a few changes to the audit plan. Agenda page 120, this highlights the changes. There's a couple of key areas that I know this committee are interested in, namely around contract management. So there is a reason we've been asked to defer that, and that is summarised there. There is a lot of contract management work that will be picked up in 24-25, so we are going to be giving it a good coverage, i.e. the contract management audit is a central audit, as well as looking at some high profile contracts that are running throughout the authority as well. So one of the key parts of this report is just to highlight any areas of weakness in governance or control through the audits that we've done. So the one that I would draw your attention to is on page 122. And this is around adults direct payments. I won't go through the individual weaknesses in here because you should have had a copy of the full report so you can see it. And those details are highlighted there, what made us award it a limited assurance. What I would say is the service has said that a number of the recommendations are well underway and progress is being made. And so we have been asked to undertake a follow-up audit promptly. So we are at the moment looking at doing further work to see if those recommendations and issues that were raised have been addressed. I would just draw your attention to the other relevant information box. There was a protracted period of this being draft to final due to some outstanding information that hadn't been received. So this is another reason why I think a lot of the recommendations have been implemented is, as I'm reporting to you now, they have been working on the recommendations while it was at draft report stage. The other one to bring to your attention, which has been mentioned in a few previous reports as well, is the Athena contract follow-up. So the Athena was an adult social care contract that did end in March 23, but there were a number of lessons to be learned from how it was managed and procured. And this highlights the progress that's been made around some of those issues. As you will see, there is still one high priority, one recommendation outstanding that's in progress. And again, you should have that information to hand in the full report that you've got a link to and was shared with you. Key things to draw your attention to that are outstanding, if you turn down to agenda page 126, obviously the key financial control work. So again, how our audit programme has been working, as this is a new organisation from April 23, it was trying to take a holistic view starting at the top and working through key areas, particularly a number of the key routine financial areas. And the ones that I'm sure members of the committee would be interested in is financial control and reporting, budget monitoring, as well as the budget planning and assumptions one as well, looking at 24-25 assumptions, as well as looking back at 23-24. There's a few other high profile ones in there that we've received a number of complaints from members of the public around educational and health care plans, which has obviously been in the press. So we are doing some work in that area, although the new service director in that area has asked us to extend the scope of that review. So there is some further work we'll be doing around that as well. I think I'll leave it there. If you've got any specific questions around any of the areas that are included in this report, happy to take your questions.
Okay, throwing it open to members. Mandy?
Try and be brief, Chair. Page 4 of your report says that there are 58 pieces of work that are 91 plus days overdue. I just wondered, are they looked at? Are they all still wanted? You know, why are they so overdue? It seems quite a long way over. And second question was actually around ORG 61 on page 10, which is the health and safety governance, which had some areas of concern. Just to say that did come to HR committee this week, and there was quite a long debate on it and lots of work going on in that area, which I think was reassuring. And the last one is actually the health care plans. There's been quite a lot of dialogue forward and back with the portfolio holder, and I know there is a concern on the backlog of those and the potential financial impact. So I think there's lots of interest and emails flying around about that. So I welcome your work very much on that. Thank you, Chair.
Will? Yes. Alistair.
Thank you, Chair. Yep, so on the overdue recommendations, so we have given access to the dashboard and to the recommendations to all of tier 2 and 3 service and executive directors, and as well as key officers. We do chase officers that are responsible for these recommendations regularly, and that would pick up if they felt any of them were no longer applicable, if things had moved on. What I would say of those 58, and if you look at the details in there where we've had responses, a number of them are in progress, but have just not reached that point where it's got to a finalised state and we can actually close it off. Some of the recommendations do require a lot of input and some significant changes, which are not so easy to implement over a short period of time. But it is something that the committee are quite right to have an overview of, and it is something I will pick up with the chair, because I know your agenda has been very busy this year, and usually we do call officers in that have outstanding actions to give direct responses to you as a committee on what's happening with those. And that will be something that also I discussed with the chair that we look at doing now the backlog of accounts has been dealt with.
I'll follow on from that, Chair. I just sort of have concerns with the authority capacity wise in the coming 6 to 12 months. With the best will in the world for all, I don't know that a piece of audit work might be top of everybody's agenda with the competing pressures. So I just wonder whether there needs to be a piece of work across the authority just to look at that, look at which are the key ones, but also be conscious that for some areas they just might not have the capacity to respond and work with auditors.
So from the management, do you have any proposal on rationalising or prioritising those outstanding actions?
So one of the things we are putting in place is a new board looking at budget monitoring, risk and performance. Part of that is the outstanding audit recommendations as well. So looking across at Liz, who is I think going to be chairing that board to make sure that that challenge is there, etc. You're right, Mandy, capacity across the organisation is stretched, but these audit recommendations are really important. That's why they were done in the first place, particularly the high ones, etc. So I think the other bit I would say is the new system that SWAP got, the audit board system, actually does give people access in a better way now. So really, there's not a lot of excuses for people not doing them and progressing them. But as management, we will be chasing people to get them updated to make sure they're done. But in a time of turbulence, that it is more difficult. We've just got to accept that. But we absolutely management's response is to try and push this.
Got Liz, but I just wanted to ask you then. So the new board that you're setting up, how does that fit into the overall governance framework? And it sounds like there's some areas of overlap here. Obviously, audit committee is reviewing risks. So how will we work with it to ensure that there isn't duplication? Don't know who that question was to.
I'll start because under all the transformation plans, there was some concern about lack of member involvement. And so one of the things when we started talking about performance, risk and budget monitoring and how they work together, what the corporate performance monitoring report does, where it looks at and monitors what's happening, but is not picking up implications and actions. So Sarah Cretney was working on that. We were working on risk, as you know, with Angela Farmer and Pam Pursley. And as you know, only too well, we're working on budget monitoring all of the time. What we were trying to do and are still trying to do and need to be successful in is how we work across performance, risk and budget monitoring in a more meaningful way. Because if they're working in 3 parallel tracks, and we're not getting implications from one coming across and the strategic risks are not properly reflecting how performance overlaps with budget monitoring or not. So this is in its infancy. The first meeting of the board has been held, which was chaired by Alan Jones, with his work leading on transformation. But I'll be taking over as chair. We were to have a meeting last week, but that meeting's been put off until after audit today because of the papers that are on the agenda today. I think it's a really interesting piece of work. Sarah Cretney has come from different councils' background. She's bringing in new thinking, which I think is really good. I think the work that Lindy here, apologies, I'm not good on her last name, but Lindy is the independent member of this committee, has been extremely helpful. Angela and Pam have been doing a lot of work at how they present the strategic risks. How that is presented to executive is really important too, because I think that's one thing where we've not been strong enough, that strategic risks have not been presented in executive public meetings as much as they should be. So I think I have to say, watch this space, because it is work that is already now in action. But even though I was very willing to put my hand up to say that I would like to chair that board, they will not be public meetings, but I'm absolutely sure that they will feed into both audit, particularly on risk, scrutiny, particularly on budget monitoring and on performance monitoring, and then all of them to executive. If we don't get that right, we'll not have a good enough grasp on all of the strategic risks in order to create a viable, sustainable council. So every question anyone asks me is a valid question at the moment, every single question, but there are a lot of them. And how we work through the next 6 months, I'd say. I have an LGA mentor, which has been incredibly helpful for me, somebody who's very experienced from another council that went through unitarisation. And I've now got all my own personal milestones on a list on my office wall. And I think how we get those milestones out to ourselves as members, and I remember, you might recall, Councillor Andrew Govia asked, what's the end of the road on this? Well, nobody wants to see an end of the road. What we need to see are the milestones on the road. So what is our route through this? Where are those milestones? What are the things that I am, as lead member, particularly looking for? So I'm working through that as well, and also through the achievements of the first year, because we've talked, haven't we, this morning about the achievements on the statement of accounts for all those predecessor councils, but there are lots of other achievements, and when life's tough, you tend to stop looking up and you tend to stop looking at where you're being successful, and you concentrate on the challenges. And I'm sure everyone who works in the finance team has felt that way. And it's certainly for me, as I started listing what I could see had been completed through the first year of Somerset Council, I became actually not only surprised that I had 200 lines on my spreadsheet, but actually by the breadth and the depth of that work that has been achieved, and where, because we're moving forward at a quite considerable pace, probably not spending enough time appreciating what's been done. So I'll be very open to challenge and questioning as we go forward from this point. Thank you.
Thanks, Liz. I suspect we probably will want some assurance or understanding of how that's working going forward. So maybe we could put that on the forward plan somewhere to understand what impact that new board is having. Jason?
It's just a comment to be really clear. So that's not part of the formal governance of the council. It's an internal board thing to make sure the formal governance bit works better, as it were, so that we're more joined up.
Okay, thanks. So Habib and Will?
Sorry, I just interested in terms of, I mean, presumably the next item on the agenda is the internal audit plan for next year. So we're working to the plan that was done 12 months ago. I'm just interested to know, bearing in mind all that's happened, financial emergency, that kind of thing, and the extra controls that have been layered on to the finance department and indeed the entire council, how are they incorporated into the plan, or if you had to sort of add supplementary aspects to it, because clearly, you know, the financial controls, all expenditure over £100. The one that really surprised me was the stopping of paying invoices without an order number, which I never worked out how that could happen. But anyway, but those must present significant extra workload for an audit to make sure that we're complying with those. And of course, compliance with that is absolutely essential, because at the end of the day, we have to be 100%, if not more, assured that all our figures are right and that we're very much on track in terms of the next year.
Alistair would like to take that one.
Yeah, it's certainly something we've taken into account, because we've kind of viewed the organisation moving through a variety of control environments when it first went live on the 1st of April in terms of rolling out MSD, the control environment and emergency payment arrangements that were in place then. And as things became more embedded and things were implemented and working more effectively, and then it moved into this new financial emergency control environment. So the reviews we are doing when we're sample testing is looking and making sure we're covering those different control environments to see how well they did operate and what issues might arise from them. So EHCPs, for example, we're looking across payments on those that will pick up and looking back prior to the financial emergency, as well as the arrangements in place since the financial emergency as well. So it has been taken into account on every individual audit. The other thing I would say is our audit plan is always flexible. So even though there is a plan that's going to come to you, obviously we do engage with senior management, and obviously the view of the audit committee is always welcomed as well to make sure that we are looking at the right things at the right time.
Can I just briefly come back and ask it, bearing in mind the new controls we put in, are you reasonably assured from your work so far that everything is as it should be and everything is working in the way that was intended?
It's a good question. For me, because of the way the audits are constructed, they're looking at kind of component parts of what is a good financial control environment. So until they're all in, that's probably when I would be able to give a more rounded opinion. What I would say is this is a challenging year for the authority, and so there are things I'm sure people would look at and think, yeah, that could have been done better. So, but until all the work's in, I would say I've given a view until then.
Okay, thanks. Habib?
Thank you, Mr. Chairman. I'm looking at page 118, page 3 on the report. I'll see that financial stability obviously is high risk areas, but there is no numbers in front of commercial investments, which I think with the market being so volatile, I think that there should have been some sort of marking there. I think Councillor Wren asked the question about fraudulent activity. Now I see limited in some areas, but top priority. So how do we get to number 6, whereas advisory is 8 and then limited is 1? Can you sort of, I can't get my head around that. Can you explain that a little bit? And in terms of adult social care, obviously that's a big issue. So if you can actually clarify how do we get to top numbers with fraudulent activity, whereas we just got limited. So I think we spoke about it earlier that although it actually it's not that relevant in the bigger scheme of things, but it shows as a highly sort of risk area. Thank you.
Yeah, so I'll just explain the table on agenda page 118. So every individual audit we do, we issue an opinion at the end of it. And there's usually 4 opinions we can offer, which is substantial, which means the control environment is operating very effectively and the objective of the audit is achieved in terms of what the service was trying to achieve. We can offer reasonable assurance, limited assurance, or no assurance. Then sometimes we're asked to look at areas where there's a known issue and management want us to come in and do a piece of work to offer some advice on how the control environment can be improved. So that's why we have advisory on that table. So those are the works. This table only maps completed works. So picking up on your point around commercial investments, there is some work we are doing in that area. So there will be some opinions dropping in. There is an ongoing review that we've just been doing to make sure that we've got a good understanding of what's going on around it. We're also going to be looking at commercial investment income as well, because of the control environment at the moment. It's making sure that all that commercial investment income has been received. And you will notice in next year's plan, we will be looking and doing some audit assurance work around the disposal of commercial investments assets as well, to give assurance that that process is operating effectively. So this table just maps our work to what are the current strategic risks in the organisation. Now, I do appreciate there's work going on with risk and in terms of what is changing and how the risks move and change over time as well. So the ones that are identified as new there at the moment don't have a well-defined control environment, well-defined control statements against them at the moment because they're new. So for us, it's a wait and see until we might be picking up work in those areas. So that's why the coverage can change, but it is something that we do map. There's a number of ways that we map our internal audit plan coverage against i.e. strategic risks, directorate risks, and the swap control environment and risk themes as well, to make sure that we're covering what needs to be covered. So in terms of moving those up, as I say, it's individual assignment opinions that are related to each of those. So when we start seeing more reasonable and substantial audit opinions coming out on our work, those would be mapped against those core strategic risks.
Beep, sorry, we're running short of time, so I'm going to close this one down, unless there's any burning matters. Is it a burning matter? If it is, you can go for it.
Quickly, because I think Ben mentioned along with Jason earlier that, you know, our commercial entities are actually valued with the rental income. And this is high risk areas, because as the market actually, you know, comes down, then, you know, we have to sort of adjust that here. And that's why I actually picked on that area. That's all I wanted to say.
Yeah, are you happy? Yeah, perfect. So, provided members are happy, I'd like to take a 10-minute break, if that's okay. And I know this has gone on for a little amount of time. So if we can be back at 20 past, and we'll try and power through the rest of the agenda.
At council as well. So these are things that have been taken into account. I won't go through this report in detail, because obviously the main important point is the actual plan and what's included in it. So thank you to Councillor Chilcott for sharing your views as well on what items should be in here. I think all those are covered to a greater or lesser extent. Given the financial pressure on the authority and making sure there's robust financial control throughout the whole authority, there is some additional work that we're picking up in children's and adult services. In areas that we're particularly looking at will be around commissioning, contract management as well. So some quite fundamental areas. We do have a review in around risk management as well. There are also some key reviews around best value, which I know was a point that Mandy picked up as well. So we are planning to do a piece of work around best value framework, which is the framework that's still sat at draft at the moment, coming out from DLUC, but should be finalised soon. The other point to mention on this paper is the audit charter. As those of you that went to the training session early February will know, there are new audit standards coming out in January 2025. So I'm the Chartered Internal Auditor, which means I have to follow the global professional standards. Those are changing in January. The public sector internal auditing standards came out in 2013, and those are aligned to the current global standards. But as I said, the global standards are changing. So we are waiting to hear back from SIPFA on what that means for the public sector internal auditing standards, and we should hear something soon. But obviously we need to make sure that we're complying with both sets of standards. So in terms of the charter, we are expecting the charter to change and some guidance to come out on how that changes. So I've only included the charter for reference, not for you to necessarily approve. And I will bring a charter to a later meeting when we've got the new charter that's relevant for the revised standards that come in place in January, and we've had SIPFA's input as well. So the plan is laid out there on pages 143 down to agenda page 148. As I said, the individual reviews are the fourth column along, and there is some further information that was sent to you as well, and you can use the link to get to it. It gives a bit more background information to each of those areas, but happy to take questions.
Andy.
Thank you, Chair. Page 144 and page 8 on swaps about counter fraud. I think we own about was it no, not 10,000 council houses. I would have thought we'd have something to do with counter fraud about people trying to claim right to buy discount. Is that something that we would not be looking at maybe all the time, or in audits to see what's happening within those two? We've got one at Sedgemoor and obviously the old Somerset Western Taunton. So counter fraud with right to buy discounts, because it can be potentially quite large sums of money. Thank you.
It was a topic of discussion that came up in one of the planning meetings where we talked about the right to buy process and the risk of fraud. There is some work that we're going to do providing some control and monitoring information to the relevant service director on what could be put in place for the authority to make sure it's monitoring the risks around fraud and right to buy. But we're not planning to do any detailed work in that area, only providing some advice.
But they are still looking at as an organisation look at right to buys, if there is fraud, but what you're saying, we're not doing an audit to look into it. We still undertake that process?
Yes, yeah, there's a control process in place to make sure that when there's a right to buy an application, it's thoroughly reviewed and relevant controls in place to ensure that fraud doesn't happen.
Alistair, this is a quick question for me. So one of the big areas of concern for me going forward is around the high needs block and particularly the costs of SEN provision. What coverage is there for value for money in with respect to SEN? Are you proposing anything specific on that?
Yeah, so we do have some work in around the high needs block, which I'm just trying to find which page.
It's specifically around the VFM stuff with that, because I think it is an area where costs are very high and can be a little opaque, I think, for those of us that are overseeing the finances. So I think I would welcome more assurance around that. But yeah, SEN transport, so homeschool transport in particular, being an area of particular concern.
So not covered under 57 and 70 under educational establishments, Chair.
Yeah, so there is some work. There is an audit in here around educational transport as well. So again, on I think page 145, as I say, there's more detailed scope information looking through the link, which provides wider information. But if you do have specific views, happy to capture those to make sure they're taken into account when we do the detailed scoping meeting when the audit starts.
Thank you. Alistair, in terms of global internal audit standard that is coming into effect into next year, from what you see, what are the main challenges and how do we actually have, what do we do to overcome that? That's my first question. And are we prepared for it? On the risk management and outsourcing, as we're going through some of the changes with the authority going on, I mean, specifically, I'm looking at the redundancies potentially. One can foresee a lot more commissioning, outside commissioning, whereas we potentially can lose a bit of control. How do we envisage keeping a close eye on what's going on in that area as well?
Yep, so with the change to the global internal auditing standards, it does put more responsibility and on the audit committee. So there will be some training sessions that we'll be looking to do with you as an audit committee to make sure that those areas are addressed. It also changes the level of detail and information that we also need to provide to you that you have as well. So there are some changes that we will need to make sure that we address with you as an audit committee. In terms of commissioning, we have got commissioning in as a review, and I do take the point, making sure that Somerset Council does get its commissioning arrangements right and making sure that contracts and arrangements in place do deliver, are financially well managed and do deliver the set out aims and purposes of what those contracts are there to deliver. So we do have work in around that. I think those are the two questions that I've written down. If I haven't responded correctly, do let me know.
Mr. Chairman, I just wanted to know, because it's going to be quite a big area, commissioning in future years. Have we got all, do we tick all the boxes to make sure that we are in the right place? So.
Yeah, so the assurance I can give at this stage is we've got commissioning in as a review, and we'll be looking across adults and children's services, obviously two critical areas where commissioning does happen. So it is in there.
Okay, right. Simon?
Hello, I thought I'd better ask a question. Just as regards finance, do we keep details of aged creditors and debtors and trends?
So I do apologise, I didn't quite catch that.
As regards finance, do we keep details of aged debtors and creditors and the trends? So how long it's taken us to collect a debt or pay debts in general, and the trends on that?
Ben's probably the best person to answer that one.
Hi, yes, so,
Good answer, Ben.
So we developed a BI report out of Microsoft Dynamics that does our aged debtors. Aged debtors being a really important thing in terms of making sure we gain that income into the authority. And that's part of the development into the report incoming that was referenced earlier as to, is that through our budget monitoring reports, or actually do we bring that as a standalone to audit committee as well? Age creditors, we do a prompt payment performance report. So how quickly and how efficiently do we pay our suppliers, and in what time frame, i.e. 30 days from receipt of the invoice. And actually for this committee, there's also that idea that local suppliers paid within 7 days as well, and benchmarking that. So those are things that we're starting to record and report on, just to give a bit more answer than just yes.
Thanks. Right, can we move? Oh, sorry, Mandy, did I miss you?
You did, thank you. I'll try to be quick because I always wanted to move us on. So first questions around the table, which outlines all the different audit. So we've got the little tick columns at the end. I was surprised there wasn't a column actually for risk. And secondly, we've got another column with an awful lot of ticks in it. And I suppose my request is, could we have something in that other column to explain perhaps why it's being done and what it falls under? My next question is a few things that for me are probably missing. There's nothing on the new IT system for finance. I know that that's had its sort of challenges. And also we've got the bringing together of the revs and bends together. I was sort of expecting that's a huge piece of work, something to be here on that. Nothing on the risk and the transformation work from what I could see here, and nothing on HR work. And we've covered it before about the massive reorganisation, downsizing and structure. I couldn't see anything on those. And just to top it all off, I did the online training for audit that was done. I think there were a few hundred people online. So I'd like to ask you a question running out of that, and that is, as an internal auditor, are there any areas you feel that should be here and are not here, and that they should be included in plan? I'm just really conscious that often these come from officers to yourself as suggestions. So my question is, are there any suggestions that you've got?
Yeah, so the plan should always be a collaborative plan. So in terms of reports that go into this plan, it is the view of internal audit, the view of senior management, and ideally the view of the audit committee as well, which is why I thank you for your comments. In terms of picking up on some of those, firstly, the ticks, this is part of new global audit standards and the criteria it laid out in terms of having particular themes: financial, compliance, operational, cyber, or other. There's still more information that I think needs to come out around this, but it's something, again, because this plan will be in place come January, so it's trying to make sure the information complies with those standards. But I agree with you. I think the other could do with more detail, so it gives some more clarity. In terms of those areas that you mentioned, they are in the audit plan, but probably not as clear as you would like. So there's a line that's delivery of savings and transformation. So we're doing adults transformation as a separate audit, looking at that in detail. Then there's a separate audit around delivery of savings. Now that will be looking at, because obviously some of the key savings will be through the reduction in the workforce. So we'll pick up aspects of that. So it should be covered. In terms of final point, which was what do I think should be included in here? I think it gives, for me, a good enough overview, because obviously the Financial Risk Authority is facing some of the key financial risk areas, if I can put it that way. So we know that the budget pressure areas are mainly in adults and children's. We are doing work in that area, and we are looking at, because there's various different ways that money goes out of this organisation, whether it can be through a creditor's payment or whether it's through a contract that's not particularly well managed or a contract that's not particularly well procured. So there's various different ways, and we are trying to make sure that we pick up those key aspects in those directorates to give good coverage. And I know that's coverage that particular, the finance team, Jason in particular, would be appreciative of to make sure that financial management in those areas is working as effectively as it should be.
I think a key one coming back, as we've already heard elsewhere, is that sort of HR work and redundancy and budgets are all connected. I think that will be absolutely critical. Has to be really well and tightly managed, which I'm sure Jason and the team will be doing. But I sort of just expected it to be here because it's such a huge thing for the authority this year.
Do you need a response? Are you happy?
No, I just felt for me there are a couple of areas that were missing.
So I'm happy to liaise with Councillor Chilcott as we get closer to the review to make sure any concerns that she's got are being picked up and addressed through that review.
Yes, please. Did you have a question on training as well, Mandy? No. From
My
the
question was to him, then the audit trainer was saying you should actually ask your auditor. So I've just done that. Tick.
perfect. Right, so if members are happy to note the audit plan, we'll move on to item 10, which is the strategic risk report. So Pam, Angela, welcome.
Good afternoon. Good afternoon, committee. Good afternoon, chair. You have in front of you the strategic risk report. So there are a couple of things to note in the body of the report under point 5, where it says it is recommended. We took on board comment from the previous audit committee meeting that was raised by our independent chair, Lindy Jansen van Vuwen, about having executive directors with responsibility for risks attend a committee and explain how it's going for them. We'll take that on board and we'll get those factored in. There is also comment here about a CLT risk workshop. We've actually got the date for that now. That will be the 16th of April. We have 2 external facilitators from Zurich who are coming to do that. It is at Zurich's expense, not ours. They offered me a reasonable sum of money to come and do some work with us, and I said, yes, please. So that is all going to take place. Out of that workshop, we hope to have some kind of guidance as to how the organisation wants risk management to work within the council going forward. And we also have work that needs to be done after that workshop, which will involve the review of the RAG matrix that we use at present. That's the 5x5 red, amber, green, because that was the Somerset County Council matrix that we brought over through vesting to get us through the last 9 months, 10 months, whatever it is. We also need some work to define our risk statement, i.e. a set of statements, it won't be one statement, around appetite. That will have to be do with senior leaders because they're the ones that have to set the appetite. Our report also has a couple of appendices this time. So Appendix 1 is our strategic risk report. We've enhanced the report template to include some of the points that were raised by Lindy at the previous audit committee meeting. Report at Appendix 2 and 3 both highlight the questions and answers that were given to us. So Appendix 2 is from the previous audit committee meeting. There was a set of questions asked of us. They are our replies. And Appendix 3 was a virtual meeting held between Lindy, Claire Griffiths, myself and Angela, and they are the questions and answers in that appendices there. Has anybody got any questions?
Only say I quite like the new risk template. It was quite helpful. I think certainly for me it felt more navigable. I could negotiate it a lot better, and it was clear to me what was going on. But I don't know if anyone wants to disagree on that front, members.
I wonder if in future we can make a reasonable adjustment and use a RAG status, because I can't do the colour.
Yeah, if we can think about how we can make that more accessible, please. Yeah.
Thank you. Just a couple of things. Firstly, if we could get rid of all the acronyms and all the recommendations. I had to go back and work out what they are, and one of them I still can't work it out. If someone can enlighten me what all they all are, that would be great. The second thing was still around the report. It's much better. There's more in it, and certainly Appendix 1. We've got the cause consequence mitigation. What I'm still missing is that monitoring of the mitigation. If the mitigation isn't working, what do we do next? And that's still the missing from me from the report. And the second thing is this committee did ask that the 5x5 matrix and risk was at the forefront and top of decision papers. I am still not seeing that. I know it's in here that it says it might happen at some point. For me, I'm disappointed that as an audit committee, you've asked for something to happen and it hasn't. And that's probably one of the few asks we've had as a committee, and it hasn't been taken on board. For that, I'm disappointed. I'd like for that to be reported back to the executive, because if you are going to put something forward and it's not taken on and it's ignored, again, I would ask, what is the value? I don't think it's a big ask. I think there was good reasoning behind it. I just don't know why it's there and not happening.
Liz.
Thank you. It's a fair call. I think it's a mixed picture, actually, because I do recall commenting on the really good work on risk on one of the papers from Strategic Assets Management. So I think the way it's presented, you're talking about, it's not at the top of every paper, but it's within the first few pages of every paper. I think we've got it working better from some directorates than others. So I'll try and find the one that I thought was really good. And when I asked who'd done it, it was a person in the strategic assets team who'd put together that table of risk in the paper, and I'll try and find that for you and send it to you, Chair, so that you can see, and maybe we can circulate that amongst the audit committee so that people can have a look at what I thought was good practice, which it'd be really interesting to know other people's opinion on that.
That's fine, Liz. If you can send that to me and circulate. Jason?
Yeah, so in the terms of the reporting templates that people should use for committee reports, there's a section on finance and risk. They should be putting the schools in there. So I think the comments from the committee were taken on board. I think as officers not doing it is the issue. I think there is a general issue about the quality of our committee reports at times. I'm not sure that they're quite there. I have raised that with the monitoring officer. I know he is looking at that and proposing some changes. So I will feed today's comments back to him and say it's still not hitting the mark consistently. Because I think if you look at some of the reports, quite a lot of them have it in there now, but I don't think it's consistent across the piece. So I do absolutely take your comment.
Maybe we ought to monitor. Could that be reported back to us as to the number of reports with or without the matrix? I know that's probably an onerous piece of work for somebody, but what gets measured gets done. So
Yes, certainly, Chair. We've picked up the committee template. I see a lot of templates with my qualities hat on, so I know that the risks aren't always reported as one would wish, and they do hang a lot on ORG 0057, which is Jason's financial risk. So there is a work to do on the risk. So we'll see if we can progress that, and we'll pick that up with Mr. Clark.
Thanks, Angela. Right. So I think Habib was next.
Thank you, Mr. Chairman. If I refer you to page 160, the 9 very high risks, only 2 have completed the profile. I noticed that social services is not included. Is that because we've got that under control, or Is there any specific reason that that is not included there? My second question is actually on HRA and capital program income and expenditure. I think it's page 163. And my concern is actually on the HRA and audit. It shows red. I've been concerned about this for a number of years. So I think it'd be good to sort of have a specific time to look at what is going on with the HRA account. Thank you.
Jason.
Before I perhaps come back on the risks in terms of those in section 20, paragraph 23 on page 160 in terms of, I would say this is corporate level risks. So things like adults and children's are actually included in those. So reason why we haven't got a sustainable MTFP is because adults and children's are spending more money than we're getting funding for. ORG 70, the budget overspend is caused by adults and children spending more than their budget. Organisational resilience is impacted by adults and children's, and the workforce is definitely a real risk in terms of adults and children's, because if we haven't got enough social workers, we overspend by even more. So I think they're embedded in those rather than a particular risk. So that's how they're done in the way. It's how we're presenting it, I would say. So they're definitely a key driver behind those risk factors.
Right, folks. So I've got some recommendations on page 156. So 5A to F. Do you want to take them individually or do you want to take them on block? On block. Okay. So can I have a proposer? Yeah, and the seconder. So proposed, Councillor Coles, seconded Councillor Sully. Those in favour? Those against? And those abstaining? Okay. Motion carried. Thank you. Thanks, Pam and Angela, as always. So I'm going to move on to item 11, which is the balance sheet update. And this is Jason.
Yeah, so this is the report that comes before you, excuse me, in December. And what's new is the Appendix 3, the suggested action plan on page 214. So what we've done here is put down the council's response, who the earner is, the expected delivery date and who it reports to. It's just for the audit committee to review and make any comments on those. One or two of the actions we've actually already done and completed, but you'll see there's a number of those that we need to action. There's some that come through to audit committee during the year, and we make sure they're on the work programme. So hopefully it's a fairly straightforward item in terms of you've dealt with a major item before. It's just an update that we are doing the action plan and making it happen as it were.
Any comments, questions, concerns? Andy?
Just a brief one on page 212, which is actually it's a balance sheet of all the predecessor councils and some councils together. We talked about today about classification of assets should be in the right box. Under heritage assets, some of what's important, they haven't got anything, but we had, for example, we bought Tonedale Works in Wellington, which I would have thought would ideally be a heritage asset. We've got, I think, £20 million to work on that scheme and another scheme nearby. So just wondering, have we got all the assets correctly identified in the right boxes? Thank you.
In terms of the detail, I'd have to say that because it's beyond my. But this was lifted straight out of the balance sheets that were published for each of the councils. So whether they're the right classification or not, we'll take that away and just double check that. He said, looking across the bed, that he's now.
Yeah, I'll take that away. In terms of heritage assets, it's not so much the buildings and stuff. The buildings will be the buildings. It's the coin hoards or whatever it is that we hold as heritage assets. Some of that is with the Heritage Trust rather than ourselves. So whether it should be or not, but I'll take the question away and come back to you.
Another quick point. I noticed about cash position. I was quite surprised. Mendip had £28 million in cash at their end. So.
Chair, I can assure you it wasn't the lunch fund. That's town deal money mostly.
Well,
can I ask what PPE is? Excuse my ignorance. It's not PPE.
Property, plant and equipment.
Ah, right. Not so esters then. There seems rather a lot of them.
Okay, Mandy?
Quick questions. Page 46, R25, it says there's a central record of reserves held, the purpose of reserves and the forecast expected use. So I don't think, I went actually back to full council papers, budget papers, just to check. And I don't think we've really ever had sight of the expected use. I think they're there and they're listed, but I'm just wondering whether in future we should have that sort of expected use included, because that's what your reserves are for, certainly the earmarked, aren't they? So that was my first thing that I brought up. And the second things, on the bit at the end where you sort of listed it all, we've got R23, which is around balances and reserves, and it talks about that sort of minimum 5%. And then R25 talks about a review of earmarked reserves to make sure they're right, etc. You've just put R23, but I felt R23 and R25 were actually two slightly different questions, and perhaps R25 needed a response as opposed to just putting CR23. I just felt it was a different question, that was all. On page 44 and 45. And just coming back to today's papers, I have really struggled because I did this all through, you cannot cut and paste most of the papers now, and I know it's gone back to democratic services. The way the papers are now put in means you can't cut and paste. So if I'm trying to annotate things and cut and paste for questions, you can't do it now on a lot of the papers. But also I actually read through and found it easier to follow the public printed papers because every bit was broken down and you could follow it. But that is not the same as when you look at it on mod.gov. They are very different. The public presentation I actually felt easier to follow because you could click through each appendices and follow through. So I just don't know whether moving forward they need to be the same. What the public is looking at and what we're looking at should be the same, because I've been going through trying to correct page numbers today as I've been going. So I think that's another issue for another day. But when you've got a lot of pages, it's quite difficult to follow, Chair.
No, sorry, we'll take that one away, Mandy, and see what we can do for future. Okay. Right. We've got some recommendations on page 177.
Can we have a response on 25 at some point?
Sorry.
Yeah, take your point, Mandy. In the response, there are different points in the response on the earlier one. Yeah. We did say we would have used all reserves. We should have cut and pasted it and put it in there so it was a full response. And we will continue to set out the reserves and their intended use. I think that's an area we've done it, but I would say it's quite high level. We can improve on that going forward, definitely.
Great,
thank you. So the action plan that we agreed at the previous meeting is what it is. I don't think it needs any formal adoption or anything because we've already done that. So is everyone happy to move on? Yep. Okay, moving on to item 12, which is the SIPFA Financial Management Code. And Jason.
So this isn't a requirement, but it's good practice to do this. So this is us looking across the organisation and saying, how do we compare? We've done that. I would say, have we done this comprehensively in detail, engaging the whole organisation? I think the answer is no. We've done it fairly high level, mainly finance driven, to be honest. We've tried to capture the areas. These are always judgment calls in terms of where do you think you are on the scale. So there's 17 areas. In the summary and page on the public pack, 229, paragraph 9 of the report, you'll see the table there summarises. We think of the 17 areas, there's 9 that we can demonstrate we're green on. There's 6 that are amber and there's 2 that are red. We are against each of these developing action plans to make sure we embed the things that need doing. The 2 that are red, actually, the reason why they're red, it's around that longer term financial sustainability is the issue in both of those. I don't think we've got clear plans of how we're going to balance the budget over the next 5 years. There is a financial strategy paper coming to the next executive that starts to set that out. But at the time of doing this, we haven't got that in place yet. So that's the key driver behind those. I think this code, actually, it's quite a helpful thing just in terms of checking best practice and checking you are doing the right thing. So it's useful from that point of view. Some of the actions on here will feed through to the audit committee during the year in terms of the plan as we get things in place and improve things. So I'm happy to take any questions or clarifying points on it.
Thank you for the paper. So a few questions. Firstly, who was actually going to be holding this and driving it forward? Because it was sort of disappointing to see that almost half are amber and red and about half are at green. So I think there's work to do. So who's going to take on that responsibility for that work? And certainly when I looked at the two red areas, i.e. I and E, they were actually 2 out of 3 of the sustainability elements of it. So I had concern that 2 red areas were almost totally that sustainability element of the financial management code. So that for me was a weakness because it's two in one. So if I look under first of all at I, which is the authority has a rolling multi-year medium-term financial plan. I think that's a challenge, but it's saying we need it. So I'm glad that you're working on that. And the second one was the financial management style of the authority supports financial sustainability. And I was struggling with that. I've actually went and did some online reading with it because what are they meaning by style in terms of finance? I struggled with that. So I did some background reading on it, and it says it's delivering accountability, supporting performance and enabling transformation. I was just struggling to see how you would get that from a red and what you were looking to do.
Yeah, I think in terms of that one, I think at this stage, we don't have clear plans across the organisation within services of how they're going to balance their budget, how they're going to transform their budget over that medium term. That's the bit that's missing for me. When I take almost the two together, we do have quite a good forecasting of what we think our budget looks like in 5 years' time based on what it is now. So we can forecast the budget gap. That's good. We've got that in place. What we haven't got is, and then what do you do to close the gap? Because you've got a big gap there. How are we planning services? So if I get down to the detail of service plans, have we got a service plan that says what this service looks like in 5 years' time in view of the financial picture? It's not joined together at the moment. I think from the financial side, it's okay, but across the organisation, if you were to get one of the other directors in here and say to them, tell me what your service is like in 5 years' time, what your resources are, how you're planning and delivering it, I don't think across the organisation we have a consistent, we know the answer to that question yet, which is why we scored it as a red.
Just to follow back on that, I think for me it's that golden thread with the budget. How far down the organisation does it go? Who's responsible for what? And if one person's responsibility fails, you know, where does that go? So for me, it was probably the mapping of the financial responsibility in the organisation, I think, is what I would see as something we need to do more with, but happy to be corrected. But I just felt it was strange wording.
Yeah, it's not our wording, it's SITFA's. I agree, and it's one of those, when you look at the high level stuff, I think the wording's a bit misleading to when you read the detail and the guidance below it. And I didn't answer your other question earlier in terms of there is a person within finance, Sean Kenny, who has this as a particular task to make sure we're making the actions and to make sure we do the assessment once a year, which we'll bring back to audit committee this time next year as well.
I'm just conscious we have so many action plans running left, right and centre at the moment. Again, there's that capacity issue. There are so many plans running. I suppose, are they all needed as an organisation, and will someone actually have the time to actively manage them?
So Sian's covering a new role that's looking at the governance and all these things. So she has the joys of looking at them all, of bringing them all together into one plan of plans to make sure that very reason, actually, because there's a real danger that when you have so many plans of doing stuff, you miss stuff. So that is exactly what she's doing. So she is looking at the AAR, this, all the other things as
She's
well.
also working with our business intelligence team to see whether there's a more intelligent way of doing it electronically.
Joyous role.
Right, so, I've got a queue list. I've got Quill, I've got Simon. I'll come to you.
Yeah, I was going to ask a question about management style. And I thought, oh, Mandy's stolen my thunder. And then Jason started answering it. It sort of raised various questions. Actually, Jason's answer, and forgive me if I've misunderstood, would seem to point to a serious management weakness across the organisation in terms of financial management. And all right, we are where we are, as that dreadful saying goes. So therefore, we need to embed this very strongly into transformation, because the whole financial problems are not going away. So we need to be able to prioritise a good management style as part of the transformation going forward in terms of our management structure, because we can't afford not to. Is that a fair comment?
Yes. So my take is across the organisation, our financial management isn't where I want it to be. My evidence for that is I'm overspending massively in the current year. I've got budget gaps for future years that I can't solve. Now, within that, there's a whole mixture. There are some services and some service directors who are absolutely on top of this and all over it. I haven't got that consistently across the authority at the moment. So that is a weakness. This is why we're scoring it red and saying, actually, we need to get that sorted across the whole organisation.
Come back. I mean, as you say, this is multifaceted. We're not down to just to the individual and their particular skills or their numeracy or whatever it is. There's also actually how you go through your budget planning and management process. I mean, we always used to joke at work that you'd sort of spend the first quarter recovering from the end of the year. Everybody then go off on holiday and you start work on the 1st of September when somebody realised we hadn't spent our budget yet. And then you'd go herring through to the end of the year and the whole system would replete itself. So we ended up with a system where we introduced something called quarter naught. So between January and Easter, you would spend an awful lot of time planning and proposing how you were going to run your budget so you would get the thing off and running straight away rather than having this sort of time lag. So it's not down to the individual, but there is discipline in here. And clearly, and I'm sort of relatively new to this, as you know, it strikes me that we've got to have a root and branch assessment of how we run our finances. And also there has to be discipline. If people, you know, you can see the problems in adults and children's social care if the bill comes in and you just turn white overnight because you haven't got the money. I mean, those things to an extent are out of your control, but there must be other instances where there is, shall we say, a potential lack of diligence on these things and rigor, which I think we're going to have to really get hold of. And the transformation actually is our opportunity to do this.
Yeah, so we are doing things like training and that and support. We do have a finance business partner model that aligns to the services. So those sorts of things are there. I suppose what I'm saying, standing above all this, am I seeing the end result? This is a totally joined up organisation that's on top of every single penny across the piece. And I think my answer is no. I think you'd be more worried if I was saying yes, to be quite truthful, because you'd be going, the evidence isn't there. The other bit I would say, just in terms of context, if you take adults and children's public health out of this, below, underneath service directors, every service I think now has completed the next tier down, the 4th tier, they're kind of heads of service level. They have not got permanent teams below that. We haven't done that organisational structure across the piece. That brings an added complexity that you wouldn't have in a, if I call it a normal council, where you'd be very clear of a steady state you're staffing. We haven't got that. So we are in this, the impact of being 5 into 1 still is a feature in here.
Okay, who was next? Yeah, okay, and then I'll come to Simon.
Thank you. I just wanted to make the point that the papers are published now for the executive on the 8th of April. And the 2 main items on that agenda are developing the approach to transformation and the medium-term financial strategy. So again, and everybody's right to say it, we can't take our foot off the gas. We can't say, right, we set a budget in February, we'll reconvene in July or September and see how we're getting on. So having got through full council on the 20th of February, and then you'll recall a week later all the Agritas announcement and the work that finance had to do there. We've gone straight into the MTFS and the kind of laying out the plan of where we go here. And for me, that works alongside the transformation, but what they mustn't be is two parallel tracks. They must, otherwise they'll run as two parallel tracks. We'll get to probably Christmas this year and go, oh my goodness, these two are not going to come together. You know, so we would have then done all the transformation, and there will be some pain in that. We will be running and monitoring budgets, but the two not come together, we will not be successful. So I think that's again, refer to that performance risk and budget monitoring board. I think that's going to be really critical work actually. So I know that's a back office board, it's not a public meeting, but I think when we were having the first meeting and I asked the chief executive what was he looking for a chair for that board, was he looking for someone to chair the meeting, or was he looking for someone to kick the work along between the meetings as well? And he said the latter. So I said, oh good, I'll do that then. And I think that's exactly where we are now. We've set a budget, but it is, if you like, a one-off budget. And the first paper under MTFS makes that really clear, that the one-off uses of money, can't repeat those. So this is, you know, it's a really critical time in the future of Somerset Council. You're absolutely right. So I just didn't want anyone to miss the fact that those papers are already published. Thank you.
Thanks, Liz. Simon.
Thank you, Chair. Just it's a comment more than anything else. Part of the problem is we don't know what amount of money is coming until we get a multi-year settlement. How on earth can you look sensibly at your 3-5 year projection with anything that's not just a finger in the air? And I don't mean that in a derogatory way, Jason. I know you've got to try and produce something, but if we don't know, if we haven't got the certainty of a multi-year settlement, then you are, I was going to say lurching from one year to the next, but that's perhaps a little harsh. I don't mean it in those terms, but it is very difficult through no fault of our own. You know, let's hope whatever government we get next is understands the funding of local government is in crisis.
Thanks, Simon. Okay, folks, are we happy to note the action plan? It'll come back to us next year, and if anything, if there are any critical incidents through the year that demonstrate that something's not working, then I assume that that'll get fed back into the audit committee as normal. Yep. Okay, everyone happy? Right. So we're going to move on to item 13, which is fraud prevention in Somerset Council. Now, there are some confidential appendices here. So if members want to refer and discuss anything that is in the confidential appendices, we'll need to move to closed session. Yeah, so I think probably safer to move to closed session, but we need a formal resolution to do that. So somebody want to propose? Okay. Second. Okay. All those in favour? All right. That's fine. So Michelle, can you knock off the live feed, please? Welcome back to members of the public. So we've moved on to item 14, which is the audit committee work plan. So it's there for everyone to see. Is there any comments or concerns, questions, thoughts, ideas? Andy?
It said that the fraud report was going to come back. A couple of things we've covered today. I'm not sure if they're in there to come back, are they?
We'll amend, so I'm sure Michelle will pick up as part of the actions from the meeting. We'll add that to the forward plan for May, and we'll recirculate the forward plan probably next week, if that's okay.
Yeah, so my only sort of question moving forward, this is the few sort of regular items we've sort of touched on today that are going to come through. So Chair, really, it's just managing the agenda and how many items are on it moving forward, because obviously it's how we're at 3.5 hours today, aren't we? So, but it's just making sure some of those important issues actually get the time that we need to cover them off.
Yeah, I agree. So as I said earlier on, moving forward, now that we've cleared the backlog, my view is to try and become much more proactive about the risks that we're managing. So we'll give more time to get officers in and to talk in greater detail about some areas, and we'll look together to work out what things we all want to examine over the next 12 months. Okay. Are members generally content with the forward plan as is? Yeah. Okay. Fine. By my reckoning, that's the end of the meeting today. Thank you all for your time, interest, and forbearance. Hope you all have a nice Easter, and we'll look forward to seeing you in May. Okay. Thanks very much. Bye bye.